All right, let's go ahead and get this started. Everything looking good on my end. Should be coming through here any second. Volume looks good and we're live. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8 p.m. Eastern Standard Time on September 19th, 2021. Before we get started tonight, I would like to remind you, as always, this is not financial advice. These markets are extremely volatile. Please do your own research. Trade responsibly. All right, let's jump right in here. So we did get our Bitcoin close for the day at 47,200 roughly. Let's go ahead and we'll mix it up a little bit today, and we'll get started with crypto. So just looking at our Bitcoin CME futures chart, we can basically see that whatever action happened over the weekend, as almost always, was basically just erased. We went up a little bit during the weekend, came back down, and then we just reopened right at the CME close. That is an extreme sign of weakness from me. The bulls are trying to pump up the price as much as they can, trying to get people to FOMO in, trying to reignite the rally, and they are failing to do so. And I say that because, half the market is closed, and just say spot market is half the market and futures is half the market. The best time to score a goal is when there's no goalie. So if they can't, typically spot market is going to be much more bullish than futures, because futures is professionals trying to make money. Spot market is, basically amateurs or cult members trying to just pump up the price as much as they can. And obviously I am a huge believer in crypto, a big fan of Bitcoin and most of the majors. But, I'm also a technical analyst and trader, an investor. So to me, what matters is the truth, not the narrative that you want or the narrative that is being pitched. So looking here at the Bitcoin futures chart, what we can see, obviously, we called the top back here based on the triple bearish divergence, called the bottom right here based on our triple bullish divergence, rode that back up to the top here again. And now we saw once again triple bearish divergence or quadruple bearish divergence playing out, at which point in time we got the big dump. We were able to essentially, we closed a bunch of times underneath the 8 and the 21, but we were able to rally up slightly and save that price action. And now what we see happening is, we have basically lost the gap between the 8 and the 21. So whatever happens during this week, one way or another, we're either going to have to rally up and we can start to have these two moving averages diverge from each other, or if we start to just close down here below them, they're going to cross back down to the downside. The last time they crossed to the downside was back here on April 21st and resulted in, over 50% dump on Bitcoin. So since then, we had a rally back up, and the rally took us essentially back up to a lower high, which was another 82% to the upside, which is obviously excellent. Nice little rally to capture there. And again, we were able to enter that position, over the weekend off of that 30,000 level. And then once again, we were able to take profits here at roughly 52,000, perfectly called the top. And now here we are, basically confirming a lower high. And if you look at the, the thumbnail of the video today, this is exactly what a market cycle top looks like. This is exactly, what happens. We go through a euphoria phase, we have a pullback, and then we enter complacency, and everybody just says, oh, we got to cool off. Price was getting too hot. We'll still be at 75,000 by the end of the year, 100,000, a million. Everything's fine. Things are great. And then, don't realize that the trend has actually changed, and we are now confirming a lower macro high. So, obviously there's still a possibility that we could save the trend and rally to the upside. But now on the daily, we are seeing basically an 821 cross getting ready to happen. We're seeing the 200 exponential and simple still slope to the upside based on the futures chart, which is good. But again, we got a hard sell signal leaving the bullish control zone, and the Stoch's angled powerfully to the downside. We did see a slight bounce on the blue stochastic right here. But again, it looks like that's getting rejected and ready to roll over. And then obviously, if we look at the TJD TDMACD, what we're paying attention for is we want the histograms to be green. We want the slope line to be blue. Once we start breaking down and the slope line is turning red, we're entering into a bearish macro trend. Again, here we have blue slope line to the upside again, but now we're seeing more red histograms than green, and we are now below the slope line. So if we spend enough time below that slope line, it's going to flip over red once again. So we're basically at that same phase right before the big dump last time, and you'll see the exact same thing playing out once again. Now it's still possible we come up here and put in a slightly higher high before the sell-off, but it looks less and less likely as we lose momentum on this trend. We tried to have a little push up over the weekend, and like I said, it was, what amounts to a pathetic attempt by the crypto cult. So here we have the Bitcoin Bitstamp chart on the daily. This one's going to give us a little more complete of a picture. Again, we see 1C8 and 21 cross the downside here. In April, we essentially had that little sell-off, came up and confirmed a lower high. When it flipped back again to the downside, we had that capitulation move, and now we have a little better picture of the 200 exponential and simple here. We were able to rally back up, find support on the 200 exponential, get back above the 200 simple, but we see the slope line has been starting to turn purple or pink or whatever color that is on your screen. And now here we have, with that daily close today, confirmed the 821 cross to the downside. We have lost the slope on the 200 simple, even though we're still on top of it. It shows extreme weakness when you're on top of the slope line and it's still trending to the downside. So I think it's very likely that we will be down here at 45,865 today or in the next 24 hours. And then we are very, very likely going to be retesting this 42,500 level. At that point in time, anything could happen. Maybe we find support at the top of this initial push up and at that 42,000 level at the 200 exponential. But I think, again, we would just push back up and confirm another lower high. So what I'm paying attention to is, if this confirms basically as the lower high, what kind of slope line is that going to give us? And then is that going to just act as resistance every time we push back up to it? We are getting the hard buy signal on the daily right here. But this is the type of signal too, when you get the cross, this can either be a fake out, or if we just start to sell back off, these stochastics won't actually print till the end of the day. So it could easily just look like a rejection off that level. The same way this was a rejection and then we continue to the upside, we can see the same thing happen where we get a slight cross like that, or like an actual rejection like this, and then continue to the downside. So but again, we have lost the slope line here on the TJD TDMACD after we put in essentially like 3 or 4 drives of bearish divergence, showing that we were in a upward trend inside of a internal retracement from the downtrend, and that this trend was unsustainable because the indicator oscillators were not using an equal amount of energy to the price action that we were seeing. So once again, we saw the bullish euphoria back in the markets. We saw the complacency, but in all actuality, what's taking place right now is a game of musical chairs. Whenever a rally is strong, whenever we see the crypto space trending to the upside, we were seeing Bitcoin go up, we were seeing all the altcoins go up, we were seeing everything moving just in different like little steps. Some things were moving more one day, other things were moving more the next day, but they were all moving. Now that is not the case. We're seeing one thing here and there rally, one thing here and there rally, and what that tells us is that there's a limited amount of money that's cycling around between these things, and that everybody is just FOMOing into whatever's moving, and eventually, like always, we say that it's unsustainable, and it's typically a sign of distribution taking place, which obviously, you know how I feel about that, as we did call perfectly the Wyckoff distribution top back here as well. So that is very likely what's happening and will continue to happen. We are definitely losing strength on this trend. We did have a nice rally to the top, had great profits, but once again, I'm seeing the entire crypto space talking about new highs, getting extremely bullish, and this is exactly what we don't want to see, is a lower high. That's literally how every market tops. And without getting too lewd, this essentially shows you what's the problem right now. Well, all this money has been made in the space, and there's no new money coming in right now. There's nobody else bringing money in. They're talking about we're onboarding all these users. There's millions of people, hundreds of millions of people. There's all these outflows off of the exchanges. We have all these things that are telling us it's bullish. Well, the one thing that has worked since the beginning of time, since charting started, was determining the top by a lower high. So I think that's a little more reliable than coin metrics from, a 16-year-old kid that's still in college. But what do I know? I mean, it's the crypto space. So let's just believe in people that have never been involved in a market for, a year. But whatever. If you got those Twitter followers and people like what you're laying down, by all means. But it does not mean that you're going to be right. So here we have the Bitcoin Bitstamp chart with a couple different indicator oscillators in place. Here we'll see once again, stochastics are moved to the upside, but a typical place that will get rejected is at the RSI. So we have the RSI and the EMA of the RSI, RSI in white, EMA in yellow, and it looks like we're basically going to come back up to the 50% or the neutral zone, and then we'll see a rejection there. So that is what I'm expecting. We see here the Fisher is trending to the upside. Again, we want to pay attention to what happens here. Do we get back above the zero line? Do we just put in another one of these like lower peaks? Essentially, this just looks like a reset on the indicator oscillator taking place. And then finally, we'll see obviously TJD waddah attar explosion. Very clearly, this is sellers are in control and have been in control. And we saw a blue slope line was increasing here, showing us that the trend was strengthening to the downside. Here it went neutral for a little bit or was losing strength to the downside. And now we're seeing more selling come in. The slope line is flipping back over blue, telling us that once again, the selling is about to begin and it's going to accelerate or gain strength to the downside. So that is what I'm expecting. And then we can pay attention when we get to some of those key levels, what happens from there. But, it's important that we pay attention to the actual technicals. If you go anywhere and just listen to what everyone's saying, they were the most bullish at the top. They were the most bearish at the bottom. And now, once again, they are the most bullish once again. So we'll see how that works out for them. Same people that were holding bags in 2017 will end up holding bags this time, plus so many more. Here we have the Coinbase chart. Doesn't matter which chart we're looking at, but very clearly demonstrated the bearish divergence and bullish divergence that we're seeing in the markets. Very clearly see the breakdown of the channel right here. And now once again pushing back up to put in a lower high. We're seeing the stochastics rolling over to the downside. We're seeing the RSI rolling over to the downside. And now it looked like we were going to attempt to push back up with the MACD. But once again, we still have a slope line to the downside on the MACD. And we have seen a red bar show up here saying once again that it looks like we're going to start strengthening to the downside. So that is what I'm expecting to happen based on technicals, not just Moonboy hopes and dreams, which blows my mind because after the massive, amazing crypto run that we had over like the last year basically, and the amount of gains that everyone made, it blows my mind that it's not enough for people and they still have to like fake to be bullish or pretend to be bullish, or maybe they've just all drank the Kool-Aid. Absolutely blows my mind. It's like, at what point in time is it enough? If Bitcoin did hit 100,000 or maybe it hit a million, would it be enough then? Or would it have to go to 10 million then? Would people be calling out, $1 billion Bitcoin? How long until someone makes the next prediction and it's $1 trillion Bitcoin? Probably soon. I mean, I'm sure somebody has probably already said $1 trillion Bitcoin, by end of day. So Ethereum looking very weak, topped out, could not close above 4,000 obviously. And now here we have the daily cross back to the downside. We tried to avert it right here, push back up, and it completely failed. Looks like we're coming back down. I very likely expect Ethereum, the initial target probably being these little two peaks right here, about 3,000. Nice round number, 10% to the downside. But in all reality, we're going to 2,600. We're going to bounce to 200 exponential and simple and then try to push back up from there. But looking weak now. Ethereum has stayed stronger than most throughout this trend, and it was unable to rally and really do anything from here. So, and then here we'll see on the TJD, TDMACD, we have rolled over. We have a red slope line. We're below the zero line. We have red histograms. Very, very bearish looking as far as I'm concerned. And again, no surprise, as we did have a peak right here, and then we had a lower high peak right here, and then obviously we had a peak right here and a higher high peak right here. Once again, bearish divergence playing out, telling us the dump was going to happen before it happened. But, all these people are essentially hindsight traders or hindsight technical analysts. They wait until a move happens. They come back on afterwards and they tell you about the move and try to explain why the move happened. There's very few people in this space, very few people on YouTube or anywhere in the financial world that actually look at the markets, look at the indicators, write their own indicators, do actual technical analysis, and actually see these moves happening ahead of time, which is probably why you guys are here, because you know that I'm one of the few and also one of the proud. Sorry, who's that? The Army? Sorry, I stole your theme there, or your mantra, whatever it is. So ETH to Bitcoin ratio, obviously we called out the break, the bullish break of the bearish pattern, broke out to the top, found support here, continued, started to build a channel to the upside here, and now here we have broken down from the channel. This was our key area we needed to maintain support. We have a cross between the 8 and 21, just like we did here, but we bounced the support line and got to move back to the upside. We have got a cross between the 8 and 21 here. We have failed to rally above. We put in, once again, basically a rejection of the blue slope line here, and then it's rolled over. Looks like it's going to flip over red. Looks like we're headed back down here. Now in this case, we have confluence between the breakout of the triangle resistance, which we would expect to act as support, and then also the 200 exponential and simple. And then once again, we have the base of the initial triangle itself. So now if we do continue to the downside on the, Bitcoin Ethereum ratio, I would expect this area down here at like 0.58 to 0.6 to be the key target for Ethereum to try and rally and move back to the upside. But at this point in time, once again, we have a high and then we have a lower high on our price action right here. Or I'm sorry, on our ratio right here, the same as we did on price action. FTT or FTX token, put in a new high right here. Got a very nice top at the 1.236, breaking down. Looks like the daily is getting ready to cross and break down from here. I would expect a initial support around like 51.50, somewhere around there at the peak of these highs here. We're essentially now just testing the previous all-time high for support. If we break down from that, I would expect the Fibonacci support of the 0.5 and also the 200 exponential and simple. We have lost the slope on the TJD TDMACD. We got a hard sell signal at the top of the range. The 8 and 21 are crossing down. I trust the chart. Chain link, again, failing to get back above. We had a very beautiful trade, played out 20-something% to the upside, topped out perfectly at our resistance, unable to break above the resistance, broke down immediately back to the 200 exponential. We are now below the 200. I'm going to go ahead and get rid of the chain link trade setup there, just to clear this up some. We have now an 8 and 21 across the downside. We have lost the slope on the 200 simple, and we are below the slope. The 200 simple. We're still above the 200 exponential for now, but at this point in time, we're basically just going to range trade, in my opinion, between $25.20 and $28. And then when we do get the break, when the market does decide on direction, Chainlink will follow. And in my opinion, that will be to the downside. It looks like we are rolling over on the stochastics here. We have lost the slope line on the TJD, TDMACD. Once again, the markets look extremely weak. Anyone that is saying they're strong right now is obviously delusional. FTM, and if the market does start looking strong again, by all means, I will be the first one to actually tell you. But, don't believe the hype right now. The snake oil salesmen are strong. The truth is, I would have 100,000 subscribers if I just sat here and told you what you wanted to hear. If I just, told you how pretty your wife is, or how cute and smart your kids are, or how adorable your dog is. But the truth is, if shit's ugly, I'm gonna tell you it's ugly. It doesn't make me the most popular, but I will actually help you in these markets. Remember, that's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. But just remember when people are right, and remember when they're wrong. Remember who tells you about things ahead of time and who just talks about the stuff that happened and why it happened afterwards. It's just like justifying something. You're like, you cheat on your girlfriend. After you cheat on her, you made a mistake. So you come back, you try to justify it. You're still a piece of shit, even though you justified it. And that's how I feel about these quote unquote analysts, these technical anal boys, the moon boys, whatever you want to call them. FTM Phantom token, again, put in a new high right here, come back up, could not get above that key resistance level, and now once again losing strength. Still slightly more bullish as we have maintained the 821. It's not crossed to the downside yet. We're still above the blue slope line for now. You could argue that this is a bullish reset and that this will be the next shit coin to run. But again, it's just going to do what the actual market does. But it does look better than most. Solana, once again, I was telling everyone at $200, this thing was completely overpriced. We got into the Solana trade at like $40-something on the breakout and retest. Obviously taking profits along the way. It has already, since the top at $215, pulled back $50 or more since then. So, people that bought into the hype at the top have already lost like 25% plus of their money. We're seeing all red histograms. We see a sell by sell, left the bullish control zone, call the absolute top, barely hanging on to the 21. Looks like we're getting ready to break down now. 8 and 21 have not crossed to the downside yet, but we have very clear strength to the downside on the stochastics. We have lost the support of the slope line. It is still blue, but we have had only red histograms since the breakdown there. Anyone that is telling you this is a good opportunity to buy Solana when it pulled back down here, anyone that's telling you this thing still has continuation to the upside is absolutely delusional. And all they're trying to do is pump their own bags by getting you to buy in and waste your money, because they don't care about you. They don't care about crypto. All they care about is their own bags going higher. And they probably understand that they missed their chance to dump, and now they're trying to pump it back up so that they can dump on your face. SRM. Top back out here, basically a double top at this point in time. Got a little wick to the upside. Saw a pretty bearish candle come in, breaking down in between the 8 and 21 for now. Technically broke down from the 21, but they have not crossed to the downside yet. Again, same weakness on this chart. I would expect 786 at $9 roughly to hold support. After that, the 618. We've got the 200 exponential on simple here, so probably somewhere around like 650 if we see continuation to the downside. Basic attention token topped out exactly as $1 as expected. We now have the 821 cross back to the downside. Everything is strengthening to the downside. Looks very weak. We have some support through these different levels, but at this point in time, it looks like we're just going to step back down. If we just basically put in a internal retracement of our Fibonacci from our top to bottom, we can see this thing is trading fairly technically from that little dollar top. That was exactly at the 61.8% retracement of the bearish move to the downside. So we basically dumped. We moved back up 61.8% of the dump, and now we're selling back off to the downside. We are bouncing the 382 from now. We could not get back above the 0.5 on this little pathetic attempt of a rally right here. If this level breaks, I do expect basic attention token back down at 58 cents, at which point in time it will be in the serious danger zone, because if it breaks down from that level, it's going to look like it's going down to 42 cents or much, much lower if we see continuation. So Uniswap, again, fairly weak. Still between the 200 exponential and simple. Lost the slope on the 200 simple. 821 have crossed to the downside. Barely hanging on to the 200 exponential. If we lose the 200 exponential at $22.50, I expect much further downside. We're going to come back down here and retest the lows at 1440, at which point in time Uniswap probably goes to zero if we lose that level. Maybe not zero. I guess we have a couple steps along the way. Probably like back down to the single digits, under $10. So hopefully you took profits. We did get involved with Uniswap somewhere back here at it was at like $2. So it's not unrealistic to think that after, it basically 20x'd that it's probably done for this cycle. Especially when, it's obviously the cost to use the platform is, or the service exchange, whatever you want to call it, DAX, is unsustainable. You can't, the infrastructure is not there. The fees are too high. Same with Ethereum. It's unrealistic to think that these things are going to continue function. It's one day it's store value. The next day it's a currency. Then it doesn't matter because it's decentralized. It's just justifications for, hopium is essentially what it comes down to. And if you start breathing in too much hopium, you get high and then you lose all your money. Uniswap is not looking good. Momentum to the downside for sure. XRP, they're trying to say the SEC is breaking. The SEC is just trying to push the price back down so they can finish accumulating because they're owners in XRP, and XRP is the new world reserve currency, and blah, blah, blah. They've been saying all this stuff for 5 years. It's still been delisted. Now it's going to get relisted. Who cares? This thing is done. The cycle is running out, and XRP did not even put in a new high this cycle. The cult is literally dying. Too many people have drank the Kool-Aid, and you know what? They're dying. They're dying of something. I don't know if it's from the Kool-Aid. I don't know if it's from, too much hopium and they just passed out and fell down and hit their heads. I don't know if it's from the Rona. Whatever it is that's killing XRP, it's not working. Somebody needs to get out there and run a marketing campaign, because if this thing doesn't put in a new high this cycle, it is essentially a dead project. If it goes 4 years without putting in a new high, you might as well just dump your bags. XRP is going to zero. It is a complete failure. And people that are like, oh, the SEC is just holding them up in court because they want to make sure that the cycle tops out before XRP can make a new. Who cares? Why would the SEC give a fuck about Ripple, about XRP? They literally do not care about any of these cryptos. There's only two things that the SEC cares about, okay? One of them is themselves, and the other one is getting money. They don't ever put anyone in jail. They don't give a shit about anything. All they want to do is, if they think that they can win a court case, they want to take you to court. They want to get really, really close to winning, and then they want you to pay them a fee to not have to accept a judgment of, basically the penetration that is the SEC into your backside. All they care about, all the SEC cares about is getting your money. They do not care about protecting the people. They do not care about anything. They just want money. They want money. Okay. Every time the SEC does anything, Security Exchange Commission takes anyone to court ever, what do? They literally just present enough evidence that you eventually just give up, you capitulate, and you pay them millions and millions of dollars. That's all they want. So if XRP really gave two shits, if Ripple really gave two shits about anyone, about their crypto, about this market cycle, about their investors, quote unquote, they would literally just pay off the SEC like everyone else does, like Michael Saylor did. You just pay them their money and then you go about your business. But instead, they are fighting it because they think they're going to win an unwinnable situation. You will never beat the SEC. You will never win against the government because they are the government and they will literally just lie or kill you or just say that you're guilty regardless. You cannot win. It's a corrupt system. So just pay them their money and go about your business. But instead, you're just going to go to zero. So XRP, total garbage. Chart looks like garbage. Probably one of the worst in crypto. Dogecoin looks very weak. We broke down from a key level. We pushed back up to the exact level. And now here we are. We have seen the 200 simple has crossed above the 200 exponential. 8 and 21 are breaking to the downside. And for the first time, wow, this might be literally one of the worst charts in crypto. We are now seeing we're below the 200 exponential. And it has, in fact, lost its slope. The slope has rolled over to the downside. So while the 200 simple still has a positive slope on it, the daily on Dogecoin is probably one of the worst looking charts right now. Not because it didn't make a new high this cycle. It definitely meme stocked it up and just absolutely crushed this cycle. But at this point in time, this thing looks terrible. This actual chart, the actual technicals of Dogecoin, this that we're looking at right now is probably the worst chart we've watched today so far. The only one that has lost the 200 exponential. Wow. I mean, some of the shitcoins don't even have a new 200 exponential on the daily because they're so shitty and so new. But Dogecoin does. So Dogecoin looks terrible. Cardano leads, Charles Hoskinson literally bent you over and now he's just sticking it to you from the backside. So just because you don't turn around and see who's fucking you does not mean you're not getting boned. And right now, Cardano looks terrible. So have fun staking your Cardano to get a percentage while you lose a massive, massive percentage of your stack. So, if you sold at $3, like I was saying, $3 is the top, $3 is done, it's all over. You're still up massively, and obviously at this point in time, since then, it's down over 25%. It's going to go much, much lower. We're having lower daily closes every day. We're getting a lower daily close on it. So we have a couple wicks right here, but it doesn't matter. You are still getting bent over. You are still accepting the Cardano pounding right now. And I expect that pounding is only going to get worse. I mean, unless you're into that. But most people like to make money, not lose it. So we'll see what Charles has to come up with next. Everybody got pumped up. Smart contracts, Cardano, it's the best. It's going to take over the flippening. It's going to destroy Ethereum. All it has done literally is lose value since then. So buy the rumor, sell the news. The technicals were telling you back here that Cardano was a dying project. It was dead. It was done for this cycle at 260. We're now at 220, and we're headed down here to $1.65. After that, who even knows? This chart looks absolutely terrible. It's gaining momentum to the downside. Cardano is trash. Had a nice run, though. Definitely some money to be made, but let's be real here, guys. The whole narrative of all these crypto projects and how they're going to change the world and how there's all this greatness, how many of them have a actual functioning product that works? And I don't just mean, can you go on to a decentralized exchange and trade crypto with someone else that you don't know for some ridiculous ass amount of money? Sure you can. And so you're avoiding taxes and the taxman's never going to catch you. Here's the news. The taxman will catch you. You will go to jail for tax fraud and there's no one to save you. I mean, it's so ridiculous right now. People are saying all this stuff about how NFTs, you can launder your money and you don't have to pay taxes and no one's going to be able to figure it out. I'm going to tell you right now, the more an NFT sells for, the more likely you are to go to prison for tax evasion because they don't care about people that are doing little $100 swaps on Uniswap. You don't think they care about people that are doing $1.5 million like fraudulent transactions? on NFTs and stuff absolutely blows my mind. The crypto space has turned to total trash, total moon boy trash, and that's how you know the cycle is over. No one is even talking reasonably anymore. Everyone is literally just high on drugs. It blows my freaking mind. And by drugs, I mean the adrenaline of things pumping. No one is even using their brain anymore. It's so pathetic. Even people I respected have completely lost their fucking minds. Sushi looks terrible. Another lower high, clear downtrend. Really need to get back up here above 21. 8 and 21 getting ready to cross to the downside. Another lower high, blew through the trend line, the slope line. Tried to flip back over blue and got rejected, as typically you would expect to happen. Maddox still trading extremely technically, very much respecting our Fibonacci. Internal retracement still. We basically have just broken down from the 0.5, attempting to rally back up. Another in a series of lower highs. 821 cross to the downside. Looks terrible. Lost the slope line. Stochastics trying to cross to the upside. Looked like it's about to just be another rejection like this one. Looks terrible. Maddox headed down to $1.10. After that, 89 cents. Polkadot, much stronger than most. It actually put in a high right here, came down, retested the 200 simple, and then put in a new high. But again, it looks very weak at this point in time, selling back off, barely above the 21. We have lost the slope on the 200 simple, even though we're well above it. This looks like basically just distribution all over someone's face. $27.68 is the next target to the downside, possibly as low as 24. If this thing should rally, if all of a sudden it turns into the next of the crypto meme stocks, I expect it to come back up here to $48 and test the highs. I think that's extremely unlikely, but a 50% rally is not impossible at this point in time. We're seeing very clear bearish divergence between the indicator oscillators, and obviously crypto is running out of steam. I mean, there's no one new coming into the space, and the people that are coming into the space, they will literally be gone in the snap of fingers because they're buying in at essentially a couple percentage or at all-time highs. Litecoin, obviously tried to start up this rally. Someone, obviously did some extremely illegal shit, tweeted out, acted like Litecoin was getting picked up by Walmart. In my opinion, Walmart should have immediately come out and said something. Litecoin founder Charlie Lee and their their Twitter account, everybody should have just come out immediately and said, we don't know anything about this. Instead, they're probably going to be they're going to get investigated by the SEC. They're going to get fined by the SEC. They will come after because their official Twitter account came out and said, this is great news. Like, you can't, Litecoin is so big, it has so many employees, and it's such a huge project that it's like, oh my gosh, we got picked up by Walmart. How did I not know about this? Let's quickly tweet it. You couldn't just ask like the other 3 people working on Litecoin, hey, did we get picked up by Walmart? No, I don't think so. Hey, Charlie, did we get picked up by Walmart? Nope, I don't think so. Maybe we better not tweet out about it because we don't want to go to prison. This whole situation, this whole crypto market is absolutely out of control. Litecoin is on the border of one of the worst cryptocurrencies that still exists right now, as it essentially just came back up and retested the all-time high, but could not break above it. Bitcoin dominance looks absolutely terrible. We broke down from here. Essentially what I'm expecting to happen is an attempt to move back to the upside. We put in some bullish divergence down here. Still looks bad on the weekly, but essentially what we're just determining now, is this the end of it? Obviously Bitcoin dominance went lower in 2018 for like the alt cycle pump, where the alts went absolutely parabolic after Bitcoin had topped out. Was this that move right here when the alts went absolutely parabolic after Bitcoin had topped out? I mean, we really don't know yet. Technically, Bitcoin topped out around this range while our alts went absolutely parabolic, and now we're just trying to hang on to that level. So not a ton to be told right here. We're still in a very clear downtrend on this, but at some point in time, hopefully, for the health of cryptocurrency and the future of cryptocurrency, hopefully Bitcoin can actually gain some strength back, get back above the 200 exponential and simple, and that will basically be, the beginning of the bear market and the death of many of these fake scam altcoin projects. Total market cap on the weekly, basically just a double top, slightly lower, but trying to hang on to its support levels here. We see a very clear, much weaker push up here. We have maintained and gotten back above the slope line, but we're already starting to see some weakness come in. And obviously this is no thanks to Bitcoin. This is the trash bag altcoins that push back up, the musical chairs of, meme stock cryptos. Riot looks absolutely terrible, has looked terrible for literally month after month after month. This thing looks like it's about to die. Below the 200 exponential, lost the slope, 821 half cross to the downside. 200 simple looks pathetic. Inside the bearish control zone, all red histograms. Riot is trash. MicroStrategy, absolute trash, total scam. Still above the 200 exponential and simple, barely. Michael Saylor coming back out, buying some more crypto, trying to pump the price back up, blah, blah, blah. Apparently all the wisdom in the world and all the billions of dollars of borrowed money does not tell you when we're clearly putting in a series of lower highs that probably it's time to go. And when Michael Saylor does go, when he does capitulate, when he does start selling into the market right here, and everyone knows his wallet address, and the market is going to absolutely die. And so is his stock. So he's probably going to come out and start dumping his stock and dumping Bitcoin at the same time. So you won't hear about it until afterwards. And then people will say, Michael Saylor betrayed us. Oh my God, I can't believe it. Oh. Well, you heard it here first, ladies and gentlemen. Or maybe he fakes his own death. I don't know how he's going to do it this time. It's different every time. But I'm sure at the end of it, he will be paying fines to the SEC or faking his death and buying some island somewhere with all the money he scammed from all these stupid-ass people. Coinbase looks terrible. Series of lower highs breaking down. Lost 821. Lost the slope line. Bearish control zone. Absolutely terrible. Robinhood, basically trying to bottom out right here, getting the hard buy signal for literally the first time in its existence, but that doesn't say much. But the real question is, can it get above the 21? It has been unable to do so. If it gets back above the 21 at like $45, which is basically like 7% up from here, I would expect basically a pushback up to, it's a tough one. It could go, it depends if this thing's able to gain any momentum. The majority of its new growth was through crypto. The majority of its profits was from people trading Dogecoin or selling, order flow. So, look, realistically, initial target on Robinhood, $47.50. After that, $53. Do I think it gets there? I really don't. Depends what happens, obviously, in traditional markets. But, if either one of them starts to show weakness, traditional markets or crypto, something like Robinhood is going to get a double dose of pain. So, you're better off, I think, just buying stocks or buying crypto than trying to bet on the two of them together, because you need them both to stay strong for something like Robinhood, to stay strong. So, and obviously, like Coinbase outages during like the last big pump, last big dump, the stock goes down. Now they can't, sell a security of interest on borrowing crypto. The crypto Ponzi scheme is, and that's what it is at this point in time. It's a giant Ponzi scheme, giant pyramid scheme. It's very unfortunate because I was a strong believer in crypto, but, essentially everything's going to get corrupted. And another argument about the whole Bitcoin situation, there's only so much Bitcoin, and now everybody's souring on gold and talking trash about gold. I told you what's happening with gold for months, and silver. The charts look like trash. And why is gold weak now? Because derivatives. There's so many derivatives, and people talk about the manipulation and the paper markets and all this stuff. Why? There's only so much gold in the ground, okay? It's not like they just pull up all this extra gold and they're like, oh, we found another million ounces and we're dumping them on the market. No, they built derivatives, paper trading on top of gold. So there's literally actual gold price and gold transactions, and then there's people betting on the price of gold, and that's what the derivative is. It does not affect the actual gold. It's just two people saying, hey, I bet you the price goes up. Hey, I'll bet you the price goes down. And then regardless of what happens, none of that money goes into gold. It doesn't affect gold's price at all. So when people come out actually, and that's what people say, it's manipulation. Well, why is that not going to happen to Bitcoin? There's only 21 million Bitcoins. There's a limited supply. It's limited. And stock to flow ratio and outflows and inflows. Well, what the fuck? It's all paper trading going on now in Bitcoin anyway. All these ETFs, all this MicroStrategy, all of this other stuff. What is it? It's the same thing. It's derivatives. It's not real. It's not real. There's no actual Bitcoin being traded with these derivatives. It's people betting on the price. So it's the same exact thing. So all the reasons that people are saying gold is trash and now crypto is good and Bitcoin is good and there's limited supply are all literally true about Bitcoin now. And then on top of that, you have the dollar Ponzi scheme. And then on top of that, you have the Tether and, stablecoin Ponzi scheme. So Bitcoin is literally a Ponzi scheme on top of a Ponzi scheme on top of a Ponzi scheme. So, I mean, but the leverage is at all-time lows. Sure it is. Sure it is. But hey, what do I know? I'm just here looking at technicals and using my brain. I know most people don't look at technicals or use their brain, so I'm at a double disadvantage. GameStop got the push up as expected off the 821 cross. Still holding on to price action at this point in time. I think it is possible if we break above the red trend line here at 215 that we come back up and top out again at 283. We are gaining some strength. I mean, we're losing strength, but we're above the slope line. Stokes look weak. I mean, look, this thing's been going sideways forever. There's lots of volatility inside of it. You can definitely make money on scalps, but right now is not the time to be holding bags of GameStop, in my opinion. AMC, again, looks like trash. Had a nice little pull up here off the 821. Now it closed back below the 21. Looks like we're about to get the cross back down. Hard sell signal. We did flip the slope line back over blue, which is good, but no. Only selling since then. We topped out literally at the 618, the perfect top. The best case scenario right now for AMC is that we just sell off hard and fast down to 35.90. And I know that's going to hurt people's feelings, and they're going to say, how is that the best case scenario? How is that a good thing? Well, it is, trust me, because it would be a higher low, and that's what AMC needs to do. It needs to put in a higher low, and then it can see continuation to the upside. Is that going to happen? Well, probably not. But we'll see. We'll see what happens. It's definitely a possibility. But again, let's just remember this is a garbage company with no future. So it should be treated as one. The same way some altcoin should be treated as just selling a rock to somebody else for more than they paid for it is the same way you should be looking at these meme stocks. You should be, if you're going to be buying a meme stock, you should be buying it hoping to sell it for some other sucker down the line for more money. It shouldn't be because you want to upset the man or you want to short squeeze, the corporations or, hurt the big guy. That's all a bullshit narrative. You can see the plays that are happening inside of like AMC and GameStop and all these things. These are not regular people that are pushing the price up to the upside. All the hedge funds have basically just said, oh, look, let's just take advantage of the moves that we're seeing happen because of the plebs. So if you think somehow you're sticking it to the man or something like that, that narrative has been over for months and it will probably never be back again because you don't think that there's any hedge funds out there. You don't think there's any rich people out there that just joined onto Wall Street bets. You don't think they just watch the AMC videos and see what Trey is talking about? Like, get the fuck out of here, man. I can't believe how stupid people are. That's how you know we're at the top of a massive bubble. And you know what? I used to feel bad for people, but I don't even feel bad for people anymore. We basically need, it's like when you do something enough times and your parents like cut you slack. Eventually you're just like, you know what? Leave them in jail overnight. The whole investing community needs to just go to jail metaphorically and some of them literally. Bed Bath & Beyond, at the bottom of the triangle, still potential for a nice push up to the upside, but it would literally just be a scalp as we are now below the 200 exponential. The slope is rolling over. We're barely hanging on to support. At this point in time, we got to start really looking for the old look out below scenario of a potential breakdown from here. Initial support if we break down, $17.75. If we get a pushback to the top of the range, $37. Whatever this thing does, it's going to do it big. It's just a matter of which direction it breaks in. Excuse me. Newegg, again, breaking down from that support. Again, did not pick up the same cult following as some of these other meme stocks, which is unfortunate because it's like a legitimate company, Bed Bath & Beyond, legitimate company with actual potential in the future. But the truth is, what's going to happen? These things overshoot to the upside during a short squeeze. And the same way that eventually when they're not cool, they're not popular, or they break key levels, they're going to overshoot to the downside. And this is going to affect actual companies and like actual shareholders, investors, like businesses, stores, employees, which is very unfortunate. But again, it is what it is. This thing still looks like it wants to come down to $14. If it can break above and hold above 1950, it could get a huge pushback to the upside, but very unlikely. DraftKings broke above that key support here, that potential little channel that we were building, but then it pushed back down between the 8 and 21 right now. Again, going into football season and, the degenerate gambling that's taking place in our country and around the world, not unrealistic to think this thing could continue to the upside, retest the all-time highs. It's made some recent acquisitions. Again, another very, very common thing you see at market cycle tops. You see share buybacks and massive amounts of M&A mergers, or M&A, I'm sorry, mergers and acquisitions, which is obviously what we're seeing right now, as everything's overpriced. So people just pump up their own garbage, or they just buy some other company at some ridiculous valuation and, essentially just use that to cheat the numbers to make it look like all of a sudden, their company's doing great, when it's in fact not the case. But what do I know? I've only just read books and experienced actual market cycles. But I mean, I'm sure everything's just going to new all-time highs like anytime now. Very weak here. Hard sell signal, losing the slope line. I mean, it just looks like trash. All this looks like trash. The whole crypto and meme stock space all looks like trash right now. It's very unfortunate, but the truth is a lot of people are going to literally lose everything. They're levered up, and it is what it is. It is what it is. Gold and silver, the manipulation. This was manipulation. Why would anyone sell down here? Who's manipulating it? They're taking advantage of us. It's paper trading. Look, I call it manipulation, call it paper trading. If you and I are our own little community, and in our little community, it's just you and me, okay? And then like a couple other people come into the community and we say, hey, let's take advantage of these people by, selling some of our goods or services to these people. If you have 9 of said goods and services and I have 1, and I say, should I sell my, Reese's cup to these people? And you say, well, I'm going to sell a couple of my Reese's cups to them and I'm going to charge them $1 a piece. And then I sell my Reese's cup for $1, and then all of a sudden you say, oh, I'm not going to sell any more of mine, and you buy up all the other Reese's at $1, and then you drive up Reese's cup prices, and then eventually you decide you want to sell them later, or maybe you want to dump them onto the market for 30 cents a piece. How is that manipulation? Just because somebody has more of something than you do and decides to move the market or make the market in the direction that you don't agree with is not manipulation. It's literally what markets do. So if you're mad because there's derivatives in everything. So how can you be mad when crypto goes up? Nobody's like, oh, it's manipulation. When gold goes up, nobody's like, oh, it's manipulation. When a short squeeze happens and silver pumps up because of a Reddit forum, how is that not manipulation? But somehow it's manipulation when people admit that the gold top is in and we have now broken down below the 200 exponential and simple and they have a slope to the downside. How is that manipulation? You sure it's not literally just someone making markets because we're seeing weakness in gold and silver, and the whole trade behind gold was inflation, fear of inflation, so everybody ran to gold, and now it's becoming very clear that we're not going to have inflation, so now gold is weak? It would not be unrealistic to see gold at 1726 very soon, possibly down here at 1678. And if this Evergrande situation ends up to be worse than it is, and all of a sudden we see a bunch of leverage coming out of the system, the first thing people sell is gold, and they sell it to pay for their debts or their margin calls or whatever. So, and again, I can't tell you exactly what's going to happen with that. I don't know what the CCP is going to be doing about this situation. I don't know if they're just going to print money. I don't know if they're going to do bailout. I honestly don't know. I don't know enough about China and their motives, because they have a couple options here. They could bail out the company. They could nationalize the company and bail it out. They can nationalize it instead of bailing it out. They can do anything they want. They can screw over foreign investors, but bail out locals. They can crash the whole world's economy. They can do whatever they want. I don't know what their motivation is at this point in time. I can only speculate, and I'm sure somebody is more educated on the topic than I am. Do I think this is going to be some big Lehman Brothers moment? Couldn't tell you. I honestly could not tell you. I just don't know enough about the Chinese situation. And the truth is, if there's one group that's the most manipulative of the numbers and what you see and has the least reliable technicals, it's China. So that's the least qualified I am to like speculate on something like that. Silver back down here, retesting the lows, putting in basically what amounts to that same channel. But you know what? I think I deleted my silver chart because it was just getting too nasty. What am I about to do? Put that channel back in here. Matter of fact, I'll just use the regression one so I don't have to pay attention. This is basically what we're looking at right now. I don't like how that looks. Just kidding. I'll draw the actual channel in here and we can see, basically have a very clear, very definable top right here. And if you want to get mad at anyone for silver and what happened and it not going back up and you want to say it's undervalued or whatever, get mad at all the people who run all these silver exchanges. Get mad at them. They're the ones who charge ridiculous premiums and curb demand. If they were still charging $1, $2, $3, $5 on Eagles, if they were charging legitimate premiums, people would have kept buying silver. But instead, they pretended like there was a shortage of silver and all the silver was gone and they had to charge ridiculous premiums because they couldn't get any more silver, and they basically stopped the bull run. They literally cut the head off of the bull run. So get mad at them. Don't get mad at the manipulation. They're the manipulators. The price of silver was doing what the price of silver was doing. And then they started charging premiums on top of it. They literally middlemanned the hell out of you, like crypto or like silver drug dealers. They literally stopped people from buying their silver drugs. So get mad at them. And now here we are for the first time on the daily since the run up here, closing a lower low. So we have a low back here at 2270. We have a low right here at 2260. And now we have a new low closed below that at like 2233. So we have a new low on this cycle for silver. So what does that mean? Well, it means we're probably going to be going much lower. Is it possible we get back inside the channel, we move back up, we retest these moving averages? Sure, it definitely is. And if we do, maybe back to 2550. But the fact of the matter is the 200 exponential and simple have both lost their slope, and now we're putting in a new low and breaking down from the bottom of the channel. Now you guys know, typically when we're inside of a range, I expect price action to continue inside that range until it doesn't. Does that mean this is going to be the one and only break of that range? And we're going to see that continuation. We're going to see that breakdown. We're going to see that, under $20 an ounce silver. I don't know. Again, I always say that the most likely situation is that this is just a little fake out the bottom and that we're going to push back up inside of the range and continue to range train for much longer. But if that is the case, if we are breaking down from here, is it unrealistic to think silver goes back down to $16? I mean, that's the measured move of the channel. I think there's a very strong support at about 20 bucks. So I would not be surprised to see silver in the teens and then get bought back up, or see a massive wick down here. I do think it will get bought back up. But at this point in time, it's looking more and more likely that we will be breaking down from these levels. And obviously if we see all this deflation hit, deflation is going to mean that the economy's slow, like worldwide. And what is that going to mean? It's going to mean commodity prices don't go up, they go down. So, demand goes down because there's less people buying stuff. So then less people make stuff. Is that going to happen? I don't know, but it looks bad. It looks absolutely terrible. But the central banks and all the money printing. Look, it is what it is, man. You want to talk about fundamentals? You want to talk about technicals? We can do a fundamental stream where I just talk nonstop fundamental and I just make you feel good about whatever it is that you like, and I can argue the side that will make you feel good. Or we can do our technical streams, and then occasionally I can sprinkle in a little bit of fundamentals, but at least you get the truth this way. And that's, I think, what's most important. So I will keep giving you guys the truth. Maybe one day a week, I'll do like a stream once a week, every week, where I just like blow up the bubble and just talk awesome about whatever topics you guys want. And I just say like, whatever it is people want to hear. I'm sure it would help the channel, but the truth is, it's not fair to people. There's so many people that are going to get absolutely destroyed by all this fake technical analysis. Like, it's so sad right now. Gold silver ratio topping out at the 200 exponential as predicted, at the exact target we predicted. Silver weakening compared to gold as predicted, as expected, as clearly defined throughout my streams. I think we will consolidate here for a little bit, probably pull back some, and then that would correspond with basically silver getting a powerful bounce off the bottom of the channel while gold kind of just lacklusterly moves up. If I'm wrong, and that would be a move back down in the gold silver ratio. If I'm wrong and we just burst through this and we start retesting the 200 simple, it means silver probably broke down from that level and is selling off violently. But the momentum is to the upside. We're in the bullish control zone. That tells us that gold will continue to gain silver in relation, in value relation to silver. So I still expect 90-to-1 gold silver ratio. Platinum looks terrible, breaking down from key levels, putting in new lows, trying to hang on to this support. There's a bunch of support through this level, but we have lost the 200 exponential and simple. We're in the bearish control zone. Platinum looks absolutely terrible. Absolutely terrible. And if, platinum's main use is catalytic converters, so it's already underperformed for literally this whole entire cycle for decades. And now all of a sudden, we're going to go to EVs. So we're not going to lean platinum for that, for the catalytic converters, because they don't use platinum. And then all of a sudden, we're not going to have any cars because we don't have semiconductors to make the cars. So probably not going to need platinum for that. So, flip a coin, heads platinum goes down, tails platinum goes down. Does not look good for platinum. Is it the end of platinum? Is it the death of platinum? Do EVs actually not take off and eventually car sales come back in? Yes, I think platinum will eventually go back up. But right now, platinum looks like shit, fundamentally and technically. Miners trying to have some kind of little dead cat pathetic bounce off of the lows right here. They basically just been getting hammered. They front run the dump on gold and silver, and now they're just trying to make up for some of it. But the truth is, miners are going to do what gold and silver do, and it's probably just get absolutely crushed. If gold and silver break down from these levels, miners go to zero. Not literally, but much lower. Pot stocks, these things are hated right now, and the charts honestly don't look that good. Tilray breaking down, about to lose the 200 simple at like all-time lows right here. These things are getting to the level where they basically, I don't want to say they can't continue selling off, but when you look at Tilray, you look at Aurora, you look at Canopy Growth, and you look at their debt to asset ratio, they all have 2 times the assets that they have debt. They all have like actual things that are worth money. It's not just some cryptocurrency that can literally go to zero. They have actual assets that if the company goes so low, you could literally, buy them out, or someone else might step in and buy them out because they have locations, they have groweries, they have, sales places, they have labs where they're creating like THC, like whatever it is you're talking about here. These things have massively underperformed since their dump, while everything else just went absolutely parabolic. These have had pathetic runs to the upside. I'm very close to basically I'm already honestly overweight in some of this cannabis stuff because I really think this sector will be one of the ones that overperforms over the next 10 years. Does that mean it can't just continue to just sell off? Let's look at the Tilray weekly and monthly chart. Looks terrible. The weekly is crossing back to the downside. 200 exponential and simple on the daily have crossed. 8 and 21 on the weekly have crossed the downside. We lost the slope line here. They look absolutely terrible. When you look at the monthly, looks absolutely terrible. Rejection off the 21, coming down here, pushing to the downside. When this comes down here and starts to develop some kind of divergence, I'm looking to buy these things. Now is not the time, but I think this is going to be, the trade of the decade, in my opinion. But we'll see. Maybe they just all go out of business. I don't know. I doubt it, though. ACB, below the 200 exponential and simple, clearly just getting rejected, looking absolutely pathetic. Weekly, same thing, rolling over 200 exponential and simple, red slope line on both of them, 821 rejecting price action. They look absolutely pathetic. Monthly, same thing, just looks absolutely terrible, just bleeding out. Throat has been slit. It's literally just bleeding out. But at some point in time, these things are going to find a bottom. When is it going to be? I have no idea. Maybe it's in 5 years, but I'm going to be watching them until then, because when they do bottom, they're going to go absolutely parabolic. A lot of these things are putting in bullish divergence. And again, these are real companies. They're not vaporware cryptocurrencies or, companies that have never made profits in the future or don't own any assets or whatever. They're real stuff. Canopy growth, again, breaking down below 200 exponential and simple, just pouring out, rolling over, looks terrible. But when we start looking at like the weekly and stuff, we're going to pay attention to see, do we put in some kind of bullish divergence here once we find a bottom? I mean, it looks like the 200 exponential and simple are going to roll over and this thing's going to get crushed. But when the jewel crosses back over and the Stochs start pulling up to the upside, if we have bullish divergence developed at that point in time, I mean, these things are going to be at, you know, rock bottom prices for what amounts to probably a new super cycle of all-time highs. But, you know, again, still technically commodities, but who knows if we go into a Great Depression, you know, shit, who knows? Probably more people be smoking pot than ever then, especially if it's like full on just socialized, like free money for everyone. URA, obviously, you know, we were talking about how these things were only going to go up for so long. Now we're seeing massive dumps come in, very toppy, hard sell signal. You know, again, this is just like basically a Sprott short squeeze. This is like these things go in 30-year cycles. All of a sudden, uranium's like popular and everybody's talking about it, and it's like front page everything. Sure, I'm sure that all of a sudden everybody's gonna pump up uranium. It's just gonna go to the moon. You know, these things, it's not gonna last. It's just the new, you know, crypto whatever. I massively believe in nuclear energy, in the sustainability of it, in the clean energy, green aspect of it, in, you know, nuclear power. I totally am behind it. But this type of move right here, not sustainable. UEC gonna dump. CCJ, you know, got rejected basically exactly where we said at the retest of the bottom of the channel after putting in a new all-time high. This is typically what we see, breaks to new all-time highs and then capitulates. Now, did Sprott buy up enough of this to make it keep going to the moon? I don't know, but probably not. Probably not. URNM, same thing. You know, I mean, it's above its support line here, which was resistance. If this holds, maybe it does see continuation to the upside, but probably not. I mean, you know, these things are going to sell back off. People are going to capitulate. They're going to lose money in uranium, and then they're going to hate uranium again. Like, uranium has been hated for 30 years. So, copper looks very weak. You know, just putting in a descending triangle. 200 simple is passed above the 200 exponential. Trying to gain some kind of momentum to the upside. But, you know, all these commodity trades are starting to just wear out, which doesn't surprise me. They had parabolic runs. Commodities were extremely unpopular when we were talking about them. Now they're super popular, and I don't want anything to do with them. Lithium, same way. The clean energy trade, the lithium batteries, the blah, 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 blah. Same thing. Looks weak. Hydrogen, again, topped out here. Fake out. Back down at the bottom. Just range trading. Looks weak. Lumber basically hit our target at the 0.5. Found some support at the 21 like we talked about. It looks like it's going to head back up here, but this is futures. I don't think all of a sudden lumber is just going to be like going parabolic again. I think it's going to come back up here, retest the 200 exponential and simple, and then roll over. Caterpillar looks weak, breaking down from the 200 exponential and simple as expected, as talked about, as predicted. Deer, slightly more positive, but same exact thing. You know, essentially looking like a double top, call it a triple top with a little throw over. Coming back down here, retest the 200 exponential and simple. 200 simple above 200 exponential. Bearish control zone, all red histograms. Looks terrible. Antero midstream, that water play, again, just like a triple top, double top, whatever you want to call it. Hard sell signal, looks weak. Stock market just looks absolutely weak right now. Doesn't mean we can't have another pushback up, but looks very weak. Cemex breaking down from that key support we talked about. We need this area to hold. It is at the 200 exponential and simple. I would expect, obviously, on the first touch, some kind of reaction rally. What we're paying attention to is it just another lower high? This really looks like we're starting to develop, you know, something like a channel, something like this. And this was like the breakdown from the heart line. I'm not going to spend time and make it perfect, but essentially something like that. I expect it to bounce back up, but when it does, maybe come back up to $7.98 bucks. Cleveland Cliffs, steel, iron, all that stuff had a nice little push up here. Still strong at the top of the range. Looks like it's getting ready to come back down here. 200 exponential and simple. I expect this in the teens again. $19 looks probable. Ford. You know, all this positivity coming out. Looks like we're potentially going to try to break out of this little Ford downtrend that's been going on here. You know, all these people talking about the EVs and it's not fair. The Tesla and the unions and the blah, 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 blah. 821 crossing back to the upside, basically bouncing the 200 exponential and so simple. I expect this to just come up here and basically just put in another lower high. but I do expect the move, the breakout of this channel to lead us up somewhere around $15 again, at which point in time, you know, again, a scalp is definitely in play right here, but it's just going to look like another lower high. I don't think this is just all of a sudden going to go to the top. They are making intelligent decisions. They are picking up momentum. We are crossing the 821 to the upside. But again, I don't see these markets just all of a sudden being great and semiconductors just not being an issue. And all of a sudden we pulled forward all this demand for vehicles and used cars and everything. I don't think people are just going to say, oh, you know what? I'm going to buy another car now. I'll buy 2 cars. Let's get 3 cars. We'll buy a car for the dog. I'm going to buy a car for my Dogecoin too. General Motors, same thing, but weaker, below the 200 exponential and simple. 821 crossing to the upside, trying to break out of this. Again, this is one of those measured move plays that, you know, for a scalp is just one of the easiest plays you can have. You know, depending on how you draw this in here, it looks like we're basically breaking out of our little consolidation channel. It's going to be harder to get above the 200 exponential and simple, but a push up to like $54 or to a lower high at like $58. Not unrealistic, but again, not sustainable in my opinion. Hasbro could not get above that key resistance, breaking down from it, getting squeezed between the 200 exponential and simple. If it does break out to the upside, it's going to look like a bullish ascending triangle. Right now, it just looks like, you know, basically a sideways channel. Works back down here at the key levels, potential entry here for another scalp to the upside above the 200 exponential and simple. Again, trash company, but it's got absolutely wrecked. I definitely think there's some potential here. I will probably take a scalp on this depending what the markets look like at open tomorrow. Any, aka Sphere, had a nice little scalp on this trash bag company, basically after just getting absolutely destroyed. I want to wait and see this come back down, retest the 200 exponential and simple, and potentially get an entry down here just under $4. I'm not buying into it after we just crush it and just giving back all the gains until we get the pullback. Weight Watchers look pathetic, putting in a new low, trying to find support at that key fib level, trying to get like that little double bottom situation to play out, but it looks very unlikely. This thing has just gotten absolutely hammered. It's trading very technically, but the breakdown of the 382, the breakdown of the ascending support tells me it's probably coming down to like $17. It had a couple opportunities to bounce to the upside. Maybe it comes back up and fills that $30 gap. Nice little 50% move to the upside. It's definitely a potential trade to be had, but I got to see something out of this. It can't even get above the 8, but I am watching it because look, let's be real here. We're only getting fatter, so I don't think Weight Watchers going anywhere, but maybe it is. Walmart, we're going to take a break here. I got 2 more charts to look at, and then we'll take a few minute break. Walmart coming back down to 200 exponential and simple. Bearish numbers. Does not look good for Walmart. Bearish control zone. Red slope line below the 0. All histograms red. 821 crossing to the downside. Are we going to get the entry we wanted right here at 142 for a quick little scalp back up? Sure, you can, but the percentages just aren't there. I mean, the risk reward is, but I mean, who's entering trades for 3% gains? Let's be real. Western Asset Mortgage, WMC, just one of the ones somebody asked me to look at. Broke down from that key blue trend line, not holding on to the support here, the key Fibonacci levels. I expect this to come down here and retest the lows. We could put in a, internal retracement of our move to the upside right here. But, I mean, the truth is, this thing looks absolutely pathetic. Does it find support at $2.40? Does it find support at $2.10? Does it find support at $1.56? Your guess is as good as mine, but we got to see something out of this. It's back below 200 exponential and simple. They both have slopes to the downside. It's breaking down from key support. Looks absolutely terrible. Absolutely terrible. And keep in mind, I think this was the one that was inside of a bunch of REITs, if I'm not mistaken. REITs are inflation hedges. So if all of a sudden the inflation trade, the inflation FOMO, the talk of inflation, the scare of inflation is going away, all of a sudden REITs are much less desirable. So, but yeah, let's take a quick break and I will jump back in and I'll take a look at that for you, my man. Make sure you smash up the likes, guys, and I will be back in about 2 minutes. And we can jump back into it, keep ripping, and we'll do our stock market and indexes as well as tech and a little bit of the technicals on the DXY, TNX, and all that good stuff. So. All right, nice quick little break. Let's jump back into it. How's everybody doing tonight? Good to see you, TJ. TJ Mulligan. Ever heard of BTCM? BTCM. Bitcoin, what is it? Tell me what it is, my man. Maybe I've heard of it, but the abbreviation, there's like BTCG, like all these other ones. It doesn't ring a bell off the top of my head. And by the way, you are also welcome. Thank you for thanking me, dude. I appreciate all the positivity and obviously appreciate that you guys appreciate what I do for the community. Dagoshi N. Dagoshi? 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 So true, he says. Good to see you, my friend. Edward. You got the actual Edward. Nothing else fancy about it. You're the Edward, the number one Edward. Good to see you. Can I check MGM? What are we talking? Casinos here? I'm assuming you're talking about the one and only MGM, not some weird crypto or something like that. But yes, we can 100% check that. I mean, a lot of these casinos have just been getting absolutely shellacked lately. So we will see what happens with them. You know, to tell you the truth, man, casinos are one of those ones where I'm just not sure what the future is going to look like. As we enter into like this tech age and gambling, like online gambling and stuff like that becomes legalized and taxed and regulated. And I just don't know that these resorts are going to ever come back. The same way I don't think, you know, travel is going to come back. The same way I don't think hotels are going to come back. Like, I really think we're looking at like an actual like change in the markets and like potential for these things. So, but yeah, we'll definitely take a look. And then nice, I see you guys all popping up in the chat saying what's up. Make sure you smash the likes, subscribes, all that good stuff, blah blah blah. Edward, thank you for the update. He just says hang tight, he'll be back in 1 minute. Good, thanks. LOL. Yeah, thanks. Hell yeah. Okay, sweet. So yeah, let's look at MGM and then we'll talk a little bit about some of this other junk that could be or is important. So MGM, let's do a little deep dive on this and we'll draw up a little quick chart. So okay, so if we look at this chart right here, let's pay attention to what's taking place. We have essentially a low back here from 1988. So we have tons of knowledge, tons of info on this chart. That is phenomenal. And then we have a clear high, discernible high here at about $95 in 2007. So then we have that massive sell-off. Obviously, the mortgage crisis makes sense. You know, 2008 crash basically took us back down to and technically took out the initial low. So we went from an all-time high to an all-time low in like a year when that mortgage crisis blew up, which makes sense. It makes total sense that that would happen. So what does that tell us? Well, we could have a potential situation like that happen again. So we got to be real careful. But more importantly, from that all-time high in 2007 to now, we've been unable in the last 14 plus years to get back to that high. So at this point in time, we have a low, then we have a high, then we have technically the same low or even a lower low if you're going by the wick. And then we have potential for, if this tops out, a lower high. So really what needs to happen is during this cycle, during like this bull run, this really needs to put in a new all-time high. You know, or is this going to look like the oil chart where it went parabolic and now we're just coming up here to put in a lower high? Honestly, fundamentally, I would say probably. But we did reclaim the 200 exponential. We are still on top of the 200 exponential on simple. The 8 and 21 across to the upside on the monthly. The bulls are clearly in control. We have positive slope line, positive histograms. You know, honestly, on the monthly chart, this thing looks good. So now let's look and see if we continue on with this internal retracement, what is that going to look like? Okay. Oh man. See, look at that. Like freaking clockwork. I mean, I couldn't have literally said that better. You know, from the high here to the low right here, what happened? Well, we came up originally to the 0.5 right here, and we got rejected over and over again. And then we came down to the 382 and we found support over and over again. So we basically just ping-ponged around here for years. And what did we do during this time? We ate through the sell wall. There was basically a sell wall right here. People that were selling to try to get out of their position at what amounts to, you know, a previously very important level. If we look back here, look at all this price action that basically maintained above that, broke down, couldn't get above it, maintained above it, broke up, back down to it, found support, and then continued to the upside after finding support a couple more times. So here, we're just eating through all those sell orders of all the people that just want to get out. And then when we did, we shoot up above the 618, couldn't hold it as support, but then we break down below it, acts as resistance, and then finally we break above it, and then we flip. Resistance becomes support again. We move up. We put in a lower high. We see the CVD dump. The dump takes us down below that 0.5, but then we get bought up aggressively off that 382 once again. So now at this point in time, we have a low, and then we have either a higher low here, or arguably this was all one move up here, and that's our higher low. But either way, we have a low, then we have a higher low, then we have another higher low, we have a high, we have another high, or again, you could count that as part of the same high, but then we took out that high. So technically, while we're still at the 786 retracement now, and a key area we would look for this to top out, we're technically inside of an internal retracement, which is a bullish retracement, a positive move up of a bearish dump. So until we take out this high right here, it's still an internal retracement, and it's technically bearish. But we're in a multi-year bullish pattern inside of an overall bearish dump. So at this point in time, do we probably already top out? Are we going to top out at the 786 or somewhere around here? Yes, probably, most likely, based on what's happening in the economy, based on what's happening, all the turmoil hitting casinos right now, and, everything happening with like the new strains and all. Yeah, it probably is topping out right around this area. But the real question is, what happens after that? It's going to do one of two things. We know that for a fact. It's basically going to look like, what should we do? A 5? No, let's do a ABC. It basically looks like we have sold off right here, and that was our A. Potentially. That was our A, and then we're coming up to put in a B, and then we're going to come down here, and either we're going to put in, another higher low from the macro right here, or a lower low, and go back down here, and basically like it gets bankrupt and then bought out by some other company, etc. But at this point in time, what it looks like is we have potential for, this could unfold a number of different ways. But, maybe this was the ABC, and now we're going to continue to the upside. Maybe it's not happening like that at all. Maybe the ABC already happened right here. That was a retracement. Now we're going to go to the upside. Countless things could happen from this point in time. But right now, what I'm looking at, let's say like the absolute most bullish case scenario, this was like the end of the retracement, and now we're looking at like basically like a 5-wave structure to the upside. We can't say this is the one, because that would mean the 2 would pull down and invalidate that by going too low. Well, it could, or the 4 rather, I'm sorry. We can't say that this is like already a 3 playing out, and then this is a 4, or down here is a 4, because the 4 has penetrated the 1. So that's not possible. We can't do that. So the next option would be essentially that this whole entire thing is the 1 right here, and that this is the 2 pullback right here. And now we're coming up to put in a 3, which we don't know where that's going to top out. But then when the 4 comes down, we would expect it to top out at the top of the 1, and then, a 5 to new all-time highs or something like that. So the best way to look at something like that is to use a Fibonacci extension off of the dump. So we could look at basically a fib from the top of the potential 1 to the bottom of the 2, like the CVD bottom right there, and then we can put that in green, and then we could see basically a retest of the all-time high would be the 1.5 Fibonacci extension. Where we're at right now is basically just the top of that, but if we push up higher, we could expect, basically the 1.236 and the 886 at the same spot. So if we haven't topped out already, I would say we're probably going to top out at 6250. But that's another 50% to the upside from here. But at that point in time, if that's the top, we would be getting a pullback down, maximum back to like where we're at right now, $40. And typically when these 5-wave structures take place, they look more symmetrical. Like we'll have a big 1 and then a big 2, and then we'll have a big 3. So if that's the case, and this is going to continue to the upside, I think it's probably going to continue back up and retest the high right here, and then have more of like, a pullback back to the top of the 1, something like that. So we're really at a key inflection point right here. You could argue that if you're already in a position and profitable, you might want to take profits. But at this point in time, if we consolidate around here, I would say as long as we stay above, and again, this is a huge margin of error on this monthly, but as long as we stay above the 200 exponential and simple, there's really no reason to get bearish on this right now. But this is one of the charts that could go either way. I would not want to invest long term in casinos just because of there's a lot of headwinds. But technically, this looks good. I mean, it is as long as we stay inside of what amounts to potentially like, you know, some kind of channel type deal like this or something along those lines, it looks good. You know, and that's a good channel right there. Here, let's get rid of these. Well, you can probably see that pretty good. I'm going to leave the fibs on there just so I don't have to redraw this if we look at it again in the future. But let's say, for instance, this blue channel now we have a top right here, a touch. We have a top right here, a touch. And then we slightly fell short of it here. We have a bottom based on closes. We have a bottom around here, like roughly based on closes. It's like slightly off, but a little confluence. And then here, look at the heart line. We have a bounce right here. We have a bounce right here. We have a bounce right here. We kind of front ran it right here. And then we have like a bounce here off the 200 moving averages. The second we broke down from the heart line right here, that CVD dump, we had a capitulation candle come in telling us we were losing key support and that we were likely to break down to the bottom of the channel. And then here we're back on top of it. We had a nice push up to it. As soon as we break, we consolidate, and that's above the 200 exponential and simple. Looks to me, honestly, like it's going to head up here to our next target. I think it looks like 65 bucks. Again, there's a lot of headwinds, so, you know, I would be reasonable and realistic if I started to see some weakness showing up, but it looks like we're going to head back up here, and, you know, maybe we even get that push up to you know, the previous all-time high. And at that point in time, if we do, I would expect a pullback when we get to the all-time high. But, you know, that's probably just the completion of the 3, and then we're going to see the 4 come back down to around like 37 bucks. So looks pretty good. Bullish control zone on the monthly. Now, if we go to a shorter time frame, we can get a better idea of what's likely to happen in the meantime. You know, we reclaim the 200 exponential and simple. 200 exponential is crossing above the 200 simple. We're above the 828, 8 and 21, saving the trend. But we are seeing quite a bit of weakness right here. Looks like it is probably, weekly looks, again, bullish, but short term probably we're going to see some weakness. And I think the daily is going to really tell us that. Yeah, we're basically looks like we potentially topped out here short term. We're finding support on the 200 exponential and simple. 200 simple has rolled above the 200 exponential, and it looks like we're getting rejected at the attempt to reclaim the 821 cross. We're getting a hard sell signal, and we're seeing a bunch of red histograms. So this is probably going to break down from this level, but it's probably going to be a buying opportunity. I mean, realistically, potentially going to get like $33 as your first like main pullback level, which is, I mean, again, that's like the heart line back here. So I would think that that's probably going to be a buying opportunity, you know, assuming nothing crazy happens with these casinos. I mean, that's probably your entry for another long and probably going to take us to the top of the range again. So there's a little bit of a deep dive on MGM. So we'll jump straight into the 10-year treasury after that. So we saw that push back up and a close at the highs right here. So you guys saw me talk about this previously. I expected a push back up here. This basically looks like an ascending triangle and a bullish move. Looks like we're going to get our blue measure move breakout, which should take us back up to like 1.59, 1.6 treasury yields. We did maintain back above the 200 exponential and simple and get that close. So at this point in time, it looks like we basically moved from a long-term bearish trend. We got back above the 200 exponential and simple, sloped them to the upside, had a nice move to the upside, got tired, came back down, found support at our key level 200 exponential and simple, and now it looks like we're going to see continuation to the upside. Momentum in our favor, looks very bullish. Very bullish on the daily. TLT, obviously, you know, 20-year treasury bonds, not the yields, you know, we're seeing the opposite. We're in a massive bullish uptrend, and then we enter into a bearish retracement. We push back up here and try to reclaim support. So far, we have reclaimed support, but more than likely what's going to happen is we get rejected somewhere around this area, and then we see continuation to the downside. But again, there's a lot of levers and moving parts when it comes to the U.S. bond market. So rather than presumptions, it's important that we understand that all these charts, the TLT and the TNX on the daily, weekly, and monthly, are all at inflection points. We're basically like in the neutral zone where it could go either way. So we just want to wait and see what the market is telling us rather than making assumptions or presumptions. The VIX did something very important that we were paying attention to. It pushed up again to our heart line, and now it has closed above the 200 exponential and simple and above the 20 level. That's the area we've been looking for. A close above that level tells me that the probability of a pushback up to the upside is extremely high. That would take us to like 28 or be roughly a 50% move to the upside. If that happens, that probably means markets are getting wrecked. And if it does, it's probably going to be fast and unsustainable. So as far as I'm concerned, as long as we're trading inside this channel on the daily, you know, if we get to the top of the range, that is a buying opportunity, you know, on U.S. assets. But again, if we see something change, some kind of trend change or something different taking place, then we can reevaluate. But as far as I'm concerned, if we see a move back up to this level, that is going to be, you know, a selling or topping level on the VIX around 27, 28. And that's going to be a hardcore buying accumulation for what I assume to be continuation in the stock market. Does that have to happen? Do stonks have to go higher? Could this be the top and it's all over? Any of those things can happen. And again, it's important we pay attention to the charts because we have to understand these are not free markets right now. They are somewhat free markets, but the Fed is very, very much controlling these. And the more we see these new programs and these levers being pulled and this manipulation, the buying, you know, of mortgage-backed securities and bonds and the propping up of assets and this, that, and the other, and the Federal Reserve statements and equality and employment and all this stuff, the more levers that are in play, the more likely it is that when something fails, we lose control. So does that mean we can't just continue to melt up and go absolutely parabolic in the stock market? Not at all. But what it means is probably there's going to be a catastrophic failure. But the question is, do we go much higher first, or does a catastrophic failure, you know, happen? And it's like, is the Evergrande, this is it. It's going to be the next, you know, crisis. This is Lehman Brothers 2.0, and it's even bigger this time, and it's China. And you know what? It's bullshit. Again, I don't know enough about the Evergrande situation. I don't know about what the Chinese Communist Party wants to do. I don't know what's going to happen here, but more than likely, it's going to be what amounts to a minor or non-event for most everything. If we see it blow up, if we start seeing things collapsing one after the other, sure, maybe it's a possibility. But it wasn't that long ago when, what was that hedge fund that blew up not that long ago? And everybody was like, this is it. This is the event. The hedge fund, they're over-levered and Viacom and blah, blah, blah. What happened? Nothing. We just melted up and kept going higher. So is this going to be the thing? Is this the black swan? Is this the... Probably not. Evergrande is probably just going to be a non-event or a short-term, you know, catalyst for a pullback that was well overdue. Oil back up here, trying to retest these highs, trying to move back up here to the high 70s, low 80s, seeing a little bit of weakness in the last couple of days. You know, but we're well above the slope line. It's getting ready to roll over blue. So it's not unrealistic to think this daily rolls back over a little bit, finds support, and then continues to the upside. We just honestly got the perfect bounce off the 200 exponential, and it really looks like oil is going to continue higher. When we get up here and start seeing like a retest of like this range, like $78, then we can get an idea as to what's really taking place. But as far as I'm concerned, when we look at the oil chart, we're on top of the 200 exponential. The 200 exponential is about to cross back over the 200 simple. We're above the 8921, the cross to the upside. We're seeing some bearish divergence developing, but the weekly is extremely bullish after literally decades of being bearish. And then here, you know, this is a key level. If we hold support right here, we'll be above the 200 simple, we'll be above the 200 exponential, and they'll both be sloped to the upside, and oil will retest the $100 to $110 range. If we break down from this level, we will probably range trade between $72 and $60. But, you know, again, this looks to me like an Adam and Eve double bottom, and it looks to me like oil is going to put in a 58 to 59% move to the upside. You know, and how do you play that? Do you play it on futures? Do you buy oil companies? Do you buy an ETF? Like, there's tons of options out here. And remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Should have breathed first. Dow Jones obviously looks weak, doing exactly, literally to a T what we said. Broke down from our key support, the green level right here. Came back up, retested as resistance. The 821 have crossed to the downside. I very much expect us to come back down here very, very much expect us to come back down here and retest this area. We have a very clear, resistance line. Matter of fact, let's just zoom out here. I'm not going to do the deep dive. There's plenty of videos on the deep dive, but, basically we have this purple top of the channel from our high back in the 1929, great, basically roaring 20 high before the Great Depression. And then we have a second point right here at the top in 99, 2000, tech bubble, dot-com bubble. And then again, we have a slightly lower high that didn't quite get there. And what is that? Well, that's the top of the mortgage crisis, 2008. And now here we are. We have a top right here in 2018. We slightly melt up higher, touch that purple resistance once again. What is that? That's the CVD dump right here. Okay. And now here we have broken out to the upside, and we're coming back down for a potential retest, starting to show a little bit of weakness here on the monthly. But when we go to the weekly, again, starting to show some weakness, hanging on to the 21 for now. Looks like we're going to sell off below the slope line. So when we come down here, what happens at 33,600 determines the trend. Could we get down here much lower to like 32.2? Yeah, it depends how heavy the sell-off comes in. But the truth is, I expect us to touch this area. Daily 200 exponential and simple. The red slope line, that we basically broke above for the first time ever. That has literally been the top of every market cycle on a macro. So could we easily fail to hold this level and see a capitulation event? We definitely could. But once we broke through this support right here, this resistance right here, and found it as support, and then we put in a series of higher lows, I expect, once again, the same thing to happen. I expect it to act as support. And the truth is, if we sell off right here, we can sell off, get bought up at 33,500, and it's still a higher low. Because we have a low right here, then we have a high, then we have a higher low, then we have a higher high, then we have another, what amounts to a higher low? Bullish. Still bullish. I know people are calling for the end and this is it and the bubble pop and it can't keep going up. It can't keep going up until it doesn't. And then once it doesn't, we can pay attention to that. But right now, it still looks bullish. It looks weak. It looks like we're going to get a pullback. But do I think this is the end of the macro trend? I do not. I do not. S&P basically getting that 821 cross like we talked about to the downside. Could it sell off massively down to the 200 exponential and simple? Because could we see $410 S&P? We definitely could. And we're seeing a bunch of weakness on the daily, on the weekly. We're seeing a breakdown from that key level. The blue support initially, the yellow support now. We're seeing the 821 cross. But again, I think we're going to come down here to 423. You know what? 423. Fuck 423. I think we're going to come down here to 420. No, somewhere around this range, probably. And depending when we get there, how long it takes, 200 exponential is probably going to be right at the 1.5 Fibonacci extension of our previous all-time high at 339, which was the sell-off from, the CVD dump 2020. We sold off from that. We came up here. We saw basically a clear resistance at the 1.236. We saw a little bit of resistance, breakthrough, found support at the 1.382. Same thing at the 1.5, broke through, found support after we broke through. And now here we are at the 1.618. We broke through. We failed to hold support. So I think we're just going to go back to the 1.5 and test that for now. And then we'll see. We'll see after that what happens. But again, still in a macro uptrend, but definitely looks like we're about to cool off. And, this time of year is when we see weakness. We're coming into the end of Q3. We've gone absolutely parabolic. Not unrealistic to think. Nasdaq broke out, still above the ascending triangle, found support initially, looks like it wants to break down and get the 821 cross to the downside. I'm still bullish on this for new highs, but again, what we're paying attention to is, do we come down to 14,420? Does that area hold when we get there? If not, it's going to look very bad. If this one breaks back down and loses support at the top of the triangle, even if it catches support at the 200 exponential and simple, which I would expect to happen, it will look very bad because we'll have broken out and then failed to hold that area as support. And if anything gets wrecked, if we do go into an actual bear market or depression or another recession, it will be tech, because tech is just out of control right now. It's like the crypto of real life. Russell still looks very, very weak. Push up above the heart line, broke down, failing to hold support at the heart line. Looks like it's coming back down to the bottom of the channel. Barely found support on the 200 simple. It's coming down to our green box area, 2136. Very weak, total trash. XLB materials for our sectors now at key support, rolling over, bleeding out, exactly as expected, predicted. 821 across the downside. I expect us to find support at the 200 exponential and simple. What happens after that? Probably just another lower high. It's going to look like a descending triangle that we're seeing all over the place. XLC, communication, one of these stronger sectors right now, but still weak. It's getting the first cross to the downside since we basically saw back in May. Before that, back in March, both those times got aggressively bought up. Essentially we can put in some kind of like support line, but in all reality, depending how you draw this, it doesn't look great. Arguably we had a support right here, support, slight break of it, support, support, and now we have broken down from it. It looks like we're headed down here to like 76.25. Again, I think realistically, the 200 exponential and simple moving averages are just going to be everything's next move. Except for the stuff that's already gotten there, obviously. XLY, consumer discretionary, literally trading inside of an ascending wedge at previous all-time highs. Probably the best chart. When it does pull back 180, I expect it to just pull back and get bought up as like our resistance flip support. XLE, energy sector, the weakest sector by far, barely hanging on to the 200 exponential and simple. Literally the only thing keeping this alive is basically like nat gas and kind of oil at this point in time. We are seeing a bullish flip on the slope line for the TJD, TDMACD. We are seeing some support on the 200 exponential and simple. Longer we hang out here, more likely we are to fail. I would expect us to get one more push up to another lower high, but the energy sector looks absolutely horrendous. XLF, financial, showing some serious weakness here. Last time this broke down, it broke down to support. It broke down to support again. I expect if it breaks down here, it's going to come down and retest that same level again, and that's going to line up with the 200 exponential and simple, probably right around that same level. I think $35 looks very likely for financial sector. And fundamentally, like, they've got a lot of headwinds. Like, they make money off of interest, and interest rates are terrible. So how do you think they're doing on making money? Probably not good. And they don't want to loan people money because the people they want to loan money to don't want money because there's nothing to spend it on because everything's overpriced. And then the people that want money, they don't want to loan it to because they don't want you buying assets that are overpriced and then defaulting when they crash. So there's not a lot helping financial sector right now as far as bullishness. XLI, industrial sector, still looks terrible. Okay, we've been talking about literally this scenario playing out for months. We're inside of this macro channel right here, going back to the CVD lows. We've been trading inside the top of the channel, bouncing the heart line the whole time. And now here we went sideways so long, we broke down from the heart line. And now inside of that, we see another channel, which has been acting as support here. So we're about to be at that. And then inside of that, we got channel inception in the industrial sector. We have another gigantic channel that goes back to 2009, which was the mortgage crisis for industrial sector. So what happens here if we get the breakdown of the smaller ascending channel and our tiny little sideways channel? I think the breakdown is going to take us down to the heart line of our macro channel. So that also just so happens to line up perfectly with the bottom of our ascending channel. So there's a bunch of confluence telling us that probably $90 is likely to happen. Now, in the meantime, we have a key fib level and the 200 exponential and simple and potentially the bottom of this channel. So we may see a little stall, a little like temporary bottom. We most likely will, probably will, quite possibly will, higher than likely will see some support through here. But again, I would expect it to come up to the heart line potentially again, get rejected, and then continuation. And this to continue showing weakness. But we know we're obviously at very high levels and don't expect continuation to the upside on industrial sector. XLK technology looks great. All-time highs, retesting key resistance to potentially flip support. 821 looks like it's rolling over, about to get a cross down. If it does, I expect it to come back to our green box area, 200 exponential and simple. The amount of confluence between where the 200 simple and exponential and our previous like resistance potentially turning support on like all these charts, all these sectors, on everything, tells me probably 9 out of 10 of these targets will get hit, and they will probably get hit perfectly, and I will be buying many of those things. The stronger sectors and the most technical ones I will be looking at as a buying opportunity. We're seeing a bunch of bearish divergence. I expect the bearish divergence to play out, and then I expect this to continue melting up. It is in the Federal Reserve. It is in the 1% or 0.1%, or like all the people that are in power. It is in the corrupted people that control the world's best interest, especially here in the United States. I can't speak for every country, to continue having asset prices go up. If the government gets a percentage of like money for taxes, it's in their best interest to have economies continue to go up, GDP to continue to go up, so that they can get more taxes, so that they can raise more money and spend more money. So they want to raise taxes and they want to inflate prices, because that way they get more money. So it's in their best interest to give everybody $15 minimum wage. So when you say, no, we're not doing it, we're not giving people a $15 minimum wage, what do? They just say, okay, socialism for everyone, and now you have to pay people $20 to get them to work. And again, that's fine. That's great. People should make more money. But if you don't think that that's going to essentially be worse for everyone, you've never studied economics and the economy and how things work. The more the government gets involved, the worse it is for poor people or middle class people or lower middle class people. The better it is for rich people. That's literally a fact. So if they sit here and say, we're helping the poor, we're inflating wages, we're inflating this, we're inflating that, well, I guarantee you that however much the minimum wage goes up, it will be, everything else will go up more, and you will be worse for wear. Anytime the government gets involved in something, it gets worse. Look at healthcare, look at student loans, look at literally anything in your life. And the more the government is involved in it, the worse it is. Because the government is the most inefficient thing. The private sector is exponentially more efficient. If you have, the government is essentially a company that doesn't have to worry about profits. So they take money from the private sector and then they spend it on dumb shit and they waste most of it. So then you have the private sector where companies have to actually make profits. Well, they used to. Now they just say they're going to make profits and people believe them. But actual companies that are profitable have to make profits for their shareholders over time. Therefore, they're exponentially more efficient, because if they're not efficient for long enough, they go out of business. So who do you think is going to spend your money better? The person who makes it and has a vested interest in spending it usefully so that they make more money, so they continue to make money, so they can support their family, they can make money for their shareholders, or the government that just takes it and has no accountability? Probably the person who cares, in my opinion. But the government cares. They want poor people to do well. Well, all these poor people that have never paid taxes in their whole lives, that are making less than $30,000 a year or whatever, all of a sudden everything's going to get inflated, including their salaries or their benefits or whatever. And then for the first time ever, they're going to have to pay taxes. So what does that mean? More money for the government. So if the government can literally just, with the flip of a switch, say that everybody makes twice as much money tomorrow. Okay, hypothetically speaking, if you make, $20,000 a year on government aid, and your write-offs for the year are $20,000, so you owe no taxes. And then all the government says, from now on, you make $40,000 a year. You're welcome, because we care about you. Now, for the first time, you're going to have to pay taxes. So they went from making no money off you because you could just write off everything with your standard deduction to now you're going to pay the tiered tax system. They make more money. So right now, like 30% of adults in the United States are paying taxes. No one else is paying taxes. Somehow 70% of the United States somehow manages to not pay any taxes every year. So if they literally can make that 30% go to 70% and invert those numbers, they make exponentially more money. So now if you make already $50,000 a year and they doubled your money and now you make $100,000 a year, well, your tax bracket is technically diminishing. As you go higher, you pay less taxes after a certain point, but you're paying net more money. So by doubling the amount of money that everyone makes, or increasing it by 10% or whatever, the government makes more money off of it. Therefore, they benefit from it. So if you don't think that it's in the government's best interest to just raise prices on everything and raise wages for everyone, you're dumb. That's literally how they get their money. And all they want to do is spend as much money as they can on the dumbest shit ever and siphon it into their own pockets. So if you made $250,000 before and now they doubled your money and now you make $500,000, think about how much extra money they get from taxes. It's literally in their best interest to make everything more expensive, because they don't just say, oh, well, because of inflation, because of inflated wages, because of inflated prices, because of the housing market, because of stock market, whatever, we're going to actually double the tax bracket. So it's like you used to get a write-off for the first 20,000, or, hypothetical numbers. The first $20,000 you make, doesn't get taxed. Well, everything went up and it's all double and you're making more money now. So in order to be fair, we're just going to say now that your general deduction, your write-off is going to be $40,000. Yeah, fucking right. The whole reason they're doing everything right now is to get more money, more power, more control. Lockdowns, taxes, wages. They want to raise everything. They want to gain control and they want to get your fucking money. That's all they care about, is reckless spending. That's how you know the world is in a bubble. We are at the end of a 100-year cycle. And at the end of this cycle, the government will eventually lose power around the world because people will be tired of it. We're already seeing all kinds of shit like that happening right now. So, expect a legitimate change in the trend, but it's not going to happen overnight. It's going to get worse and worse and worse, and finally the people will rebel. And that's how things get changed. Because right now, people are only just now paying attention to politics. They're only just now learning about finances. They're only just now buying like the narrative. And who do you think's pushing that narrative? Not the people that care about you. I promise you that. XLP, consumer staples, basically it looks like it's topping out. It looks like a double top right here. Underperformed the measure move breakout of the channel it was going sideways in. Coming back down, finding support at the top of the channel. If it breaks, it's going to come back down to the heart line or the bottom of the channel. Again, lines up perfectly with the 200 exponential and simple. If it breaks down that low, which I don't think it will initially, $68, I would expect that to be a very, very strong support, as that was a strong, strong resistance. But we'll have to see. Consumer staples, one of the better looking charts, but it really does look like it's about to get a breakdown of a double top. It looks like a double top right here. Basically looks like it wants to put in one of these. And where's that going to take us down to? Probably somewhere in between the heart line, the 200 exponential, and the bottom of the channel. So again, so much confluence between all these charts right now. Everything trading at different prices, different valuations, different percentage moves, but all the charts essentially looking the same. Some slightly stronger than others, but reflecting in all the confluence. XLRE real estate obviously been crushing it at a key support level now. That was obviously a top. We broke through the top. We're retesting the resistance as support. If we break down from here, this one's going to stair step down slowly, but it's probably gonna, I don't think it's just gonna come down 10%. I think it will eventually, but I think it's gonna stair step slowly or just slowly like melt back down. But I don't think it's just gonna dump down here. But eventually I think we'll get an entry at that. And the truth is, at this point in time, this is the time where, if you're in this trade with me, and again, it's not financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research, trade responsibly. What I do in a situation like this, when we see a breakout, we're profitable, but we're now seeing the 821 cross into the downside. We're breaking through a key level, and it looks like it's going to roll over. What I see happening now is a potential to end up turning a winner into a loser. So what I do is I say, okay, I was going to use my stop loss back here at $42, and if we broke through that, I want to be out of the trade. Well, now if I'm already in the trade, what am I doing? I'm moving my stop loss up to my entry price, so that now if we break down below my entry price, it's just a wash and I'm out of that trade. So I have a potential that if we break down here and then find support and continue, I can stay in the trade, or it can sell off and I can just be out of the trade and it was just failed. Or you could have took profits along the way. You could take profits now, but it's not worth keeping 0.5% for the potential to upside. In my opinion, the best thing to do is just take it as a wash and say, hey, I'll keep watching you, but not interested for right now. You had your chance, you failed, and I'm okay with that. I'll keep watching you from my peripherals, but I'm moving on. I'm moving on up. Because the last thing you want to do is lose money on something that you were up on, or that you could have just took the exit on and waited to see how it plays out. And time is money if you have limited capital. So even if it just went sideways for a couple months and then eventually moves up, I'd rather just re-enter it in a couple months. XTN transportation broke down from key levels. This is our canary in the coal mines. You know, we're barely bouncing the 200 exponential and simple, getting weaker each time. We broke down from our channel right here. You know, once we broke down from the channel, we expect the measure move to take us down. Where's that going to take us to? Well, either the 236 or the 382, depending how aggressive this gets. It looks like it's just going to put in another lower high. 200 simple is above the 200 exponential. It looks weak to me. You know, it looks weak to me. Jets looks like total trash below the 200 exponential and simple, and they're rolling over. Hail looks like total trash below the 200 exponential and simple, and they're rolling over. UPS, look, here's another thing. I'm hearing like mainstream media and CNBC and everything talking about FedEx and UPS, and they're down, and this is a great opportunity, and da 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 da. Okay, there's two main things happening on this UPS chart that I'm paying attention to. There is a gigantic gap in two different places. There's one right here, a big old gap right there. And there's another one right here. So what does that mean? It means we're at what should be acting as support from right here, and right here. But if we lose that support, there's nothing holding us up. So if we lose that support, we're going to just immediately break down to 180. So we're at 190 now. So this thing is just going to lose 5% instantly if it gaps back down. And then each time we try to come up here to get back up to close the gap to the upside, it acted as resistance. So that was support, flip resistance, resistance, and there's a gap to the upside. This was, you know, gap right here, and then support, support. So one of these two things is going to happen. And right now, this chart looks bearish. So I think it's more likely than not going to come back down here, and we'll take that entry off of a slight overshoot of the 200 exponential and simple for a scalp back to the upside to close this gap. You know, and that's 15% move, nice risk reward. We could take it with a 4% tight little stop loss, that tighty tight for a nice little 4-to-1 risk reward ratio. Oh yeah, UPS. But look, I'm not looking to get UPS for some long trade. I'm looking to take a scalp off of this gap down to fill the gap, and then to move back up over the holiday season when their numbers start looking good again. And then after that, I think this thing rolls over and dies. But careful what mainstream media is talking about. And FedEx looks like total trash. 200 exponential and simple have rolled over. This thing looks like a waterfall just getting ready to pour out to the downside. Again, do we come back down here to 235, find some support, push back up before the end of the year for Christmas, for this, that, and the other? Sure, maybe. But this chart looks shitty, and the fundamentals are not great. I mean, they're okay for a seasonal move back up, but looks like trash. There's a little gap right here. I mean, I'd be real careful with these transportation sector ones. Real careful. MGM. Oh, that was the one we just looked at. I'm going to jump over to the comments, and then we'll look at the dollar and tech. Make sure you smash the like, the subs, share it with your friends, share it with your dog, make another YouTube account, and subscribe so that I can gain more subscribers, blah, blah, blah. Amazing. Thank you very much from Edward. That was probably from the MGM chart. Good news. Love the TA. For sure, brother. Long from 19. Hell yeah. So you're sitting pretty right now. Oh, let me look back at, I think we were at like 30. I don't even know where that chart was at. Dear God, I lost it. Okay, here we go. I found it. 40. Yeah. Oh yeah, you're sitting real pretty. I mean, so even, yeah. I mean, honestly, you're sitting real pretty. You're great. But we are at resistance, and I do expect to pull back to $30, 32, somewhere around there. So, you know, it's definitely worth paying attention to. If we start to see some weakness, you know, me personally, I take a little off the table, or I rebalance depending, you know, what we're looking at. But, you know, I'm one of those people where I don't mind losing out on more upside as long as I'm locking in gains, because that's what really matters. Okay, so DXY, obviously looking very strong. Got that close at a key level. I mean, this is about to just melt faces. We're above the key resistance. We're above the neckline of the head and shoulders. We're above the Adam and Eve. You know, this thing looks like it's about to just burst to the upside. And what is that going to do? It's going to smash the narrative of literally everyone but us. There's like 2 other people in the entire world that think the dollar is about to be bullish, and they're only just now starting to be bullish. We've been bullish on this since we were putting in these bottoming patterns, and that just tells us we're the only ones actually ahead of this shit. Everybody else is lagging behind. There's like literally 2 other people on planet Earth that are bullish with us since the same time we got bullish. 200 exponential, slope to the upside positive. 200 simple, slope to the upside positive. Breaking through key resistance, getting ready to literally beat the shit out of everyone else and prove them wrong. So double bottom right here on the weekly, still below the 200 exponential and simple, but now look, 200 simple starting to gain a positive slope as we move back up to it. 200 exponential slope is leveling out and we're headed back to it. We will be back at 94 very, very soon. After that, 94.7, then consolidation, eat through resistance and burst to the upside. Momentum is in our favor. Triple bullish divergence in our favor. Weekly, very strong. Switching over to the monthly. The monthly looks like it is literally the best chart ever the dollar has seen. It bounced the 200 exponential, 200 simple, put in a series of higher lows, both slopes to the upside. Retested the 21 as expected, found support on the 8 as expected. The monthly looks like if it closes above where we're at right now, it's just going to go absolutely parabolic, and we're going to see like 20 to 40% move to the upside and just absolute capitulation of all the people who are wrong, and we'll just be laughing every day. I won't even do technical analysis anymore. I'll just pull up the dollar chart and I will just laugh for an hour straight, and then I'll talk to you guys on the next one. People are still like, the dollar's going to roll over. It's right about to top out. Any minute now, it's just going to die. When this chart breaks out to the upside, the markets are going to get absolutely wrecked, and people are going to be getting liquidated left and right, and we'll just be laughing. Sorry, folks. That's all, folks. Tesla up here at resistance. If it breaks through this level, I will by all means, I'll eat my words and get bullish on Tesla if we break through 781, but don't think it's going to happen. We're trading inside this channel. We're barely just getting milked up here on the 200 simple. This is options driven moves by Tesla. Even Cathie Wood has had massive amounts of outflows from her ARK funds, and now she is selling Tesla because it's over 10% of her portfolio because it actually moved to the upside, and nothing else she ever buys does, except for DraftKings. Uber looks pretty bad. Broke down from key support, coming back up to retest it as resistance. I expect it to sell back off. Still targeting $35 on Uber. Pinterest looks terrible. Still has this massive gap up here. 200 exponential and simple rolling over. Barely hang on to the lows down here. Looks like it's going to sell off somewhere between $45 and $50. Looks terrible. Wish... Context Logic looks terrible. Basically at support right here, trying to put in a bottom, putting in some kind of attempt at bullish divergence. If we get this move back up here, it could be juicy, but I'm very close to just being out of this trade. We called this bottom perfectly, but I mean, if it moves back up here, we're looking at like a 31% move. Even better now that it's near the bottom of the range. But it's got to actually show some kind of strength. 36% move with a tight stop loss from here, though. I may even double down on this one if we start seeing something. We're back on top of the slope line now. We're back inside the bearish control zone, but starting to strengthen right here. I mean, it's pathetic, but for a scalp, it looks good. Airbnb gaining some strength, still in that active trade, still on our way up here. It's slow, it's steady, it's grinding higher. If you jumped in on the double down, you basically got your entrance hit and then it bounced slightly. But I mean, I really think this thing's just going to get crushed when it gets to 175. It's going to be very difficult to get above that range, but still an active trade. Vodafone still looks shitty, breaking down from support. Again, we've been expecting this to just roll over. It looks very weak. Bumble just filling out that triangle, still looks very weak. It had a chance right here to prove me wrong and break out, and what happened? It capitulated back down. I think this thing is just going to roll over and pour out to the downside. It's going to find support at like $46, but I think this thing puts in a new all-time low or somewhere close to it very soon. Diddy, very weak, trying to put in a higher low. Very weak, having trouble getting up here. I mean, all the China stuff is trying to look good, but still looks weak to me. BZ, probably the best of China stocks right now. JD.com came back up, could not get above the 200 simple, just oscillating between the 200 exponential and simple. As long as we're between 76 and 80, I think we just range trade, but it looks like it's just going to roll over. I expect this thing to just pour out to the downside. That was like the play that we're looking for to happen on a lot of these, just to retest the 200 exponential and simple and get rejected. NEO, one of the stronger Chinese stocks, but looks very weak. Below the 200 exponential and simple, they have rolled over now. This thing could just get absolutely killed. We have some strong support at like $30. If we break down from $30, I mean, this thing could just get crushed. I would not be surprised to see this in the teens. EDU, again, looking very weak right here. We tried for a little scalp, took us out on the quick guy. I got to see something come out of this. It looks to me like just an underperforming bounce and rejection. Just not interested in this right now. Maybe we'll try another entrance in the future, but not now. I mean, all we're seeing is China has been looking terrible for months. We've seen it happen. We got out of all the China plays, and now what's happening? One thing after another. Bad news from China. Chinese blowing up. And it's like, oh, well, buy the rumor, sell the news. Let's buy the dip. It's not a dip right now. It's a dump. Everything is just dumping and just having barely like reaction rallies. It's slinky theory. It goes down and then the tail end bounces back up slightly to another lower high. And then what's it do? Takes another step down. And right now, the slinky is just going down the stairs, and all we're seeing is just the tail end of the slinky going back up a little bit, and then it just goes lower. This is not the time to be catching knives in China when we could literally just see a massive capitulation event. And China has literally been the canary in the coal mine for like the last 2 years, for CVD, for the economy, for everything. So do you want to try to catch the knife on China? No, why not wait and see what China tells us about everything else? If anything, I'm using China as the bearish indicator that tells us when to get out of our stock market and cryptos and all that stuff. And so far, it's fucking working phenomenally. So let's keep doing that. Let's not change up the game now and try to pick bottoms. Same with the pot stocks. Like, there's definitely potential. I like the pot stocks. I like the miners. I like gold and silver. I like China. I like emerging markets. But now is not the time. Now, we should be buying the few things that are still strong and trying to make scalps to the upside, not trying to catch the bottoms on the stuff that just looks like total shit. And that's what everybody's trying to do. Everybody's trying to buy the stuff that's going down. Well, they're going to keep going down until they don't. So I'm not ready to jump back in on this garbage. Peloton, obviously, like we said, dying, rolling over, bleeding out. Another failed attempt. 200 exponential simple have rolled over. This thing is headed back down to retest the lows at 81, after which it goes straight to zero. Do not cross go. Oh, no, not zero. Not zero. I might have jumped ahead. Probably it's just going to step down off these fibs. Let's be real here. I mean, it's trading extremely technically. We're getting ready to break down from the 236 in blue. Next target is the 0 in yellow at 81, 82. Then it's the 382 at 72. Then it's the 0.5 at 54. Then it's the 618 at 40. And then hopefully by then, maybe something. But Peloton, garbage company, total piece of shit, way too overvalued. They have more headwinds than someone trying to literally run through a hurricane. TSM topped out again exactly at the top. We're just range trading inside of this channel, and slowly the 200 exponential and simple are creeping up. 200 simple is above the 200 exponential. This thing is very weak, and again, this is where all the semiconductors are coming from. And right now they have a giant communist country staring at them with a bunch of warships while shit hits the fan all over the world. And if I was in Taiwan right now, I would probably just come to the United States and cross the border and just immigrate here, because these people are screwed probably. And it's like not funny, but God, I mean, we should, I don't even know. It's not our job to police the world, but at the same time, Hong Kong, what happened over there? Because that's literally what's about to happen to Taiwan. The second England or Britain or whatever basically made a deal with China and, pulled out and says you can have them back. And, eventually whatever, what happened? A month later, China's like, nope, that's ours now. And bye-bye to all your rights. So if you don't think they're going to do the same thing to Taiwan, you're an absolute moron. And I know you guys don't think that, but the rest of the world apparently does. And you know what? CCP is just going to go take them over, and nobody is going to do shit about it. Intel, triple bearish divergence on the monthly. Looks like shit. Again, I hear them on CNBC. I hear the talking heads. Intel is a value. You want the dividends. It's great. 20-something years, and this is not put in a new all-time high. So while you got all those dividends for 20 years, and you collected dividends, and it was a safe bet, the only thing safe about Intel was a weak dividend and never putting in all-time highs for 20-something years. You could have bought literally any other semiconductor company in the space and absolutely crushed it. You're like, yeah, but you're not counting for time value of money and reinvesting dividends. And let's just look back at the people that are still talking about Intel are morons. Will that change in the future? Sure, maybe. It put in its all-time high in 2000. Okay, it took 20-something years to retest the all-time highs and couldn't even get there. And now it has triple bearish divergence on a monthly, which means it's probably going to capitulate and go down to $36. So even if it just goes sideways and then finally breaks to a new all-time high, all-time high previously was $73. So it's down 33% in 20 years. It's down 33% in 20 years. Let's look at NVIDIA. And granted, it's not fair, but let's look at where it was at in 2000. Let's see, NVIDIA in 2000. NVIDIA was at 57 cents, and now it's at $219. Like, what the fuck? What? I mean, are you serious? No, Intel's going to come back. Well, you just missed out on 35,253%. Intel is a total piece of shit. That's not fair. You're cherry picking. Sure, you're right. Let's look at AMD. Where was AMD in 2000? AMD in 2000. Previous all-time high, $46. Up 100% since then. It was 46. Now it's over 100. So it's up 100%. So which one would you rather have? The one that goes up 100% or the one that's down 33% and pays us a consistent dividend? It's consistently a piece of trash. And people are still talking about how it's due while it has triple bearish divergence on the monthly. And it looks like MicroStrategy's chart. And that's shitty, by the way. SMH, VanEck Semiconductor ETF. Let's look at that one. I don't think this is going to go back to 2000. Basically, the 2000 top. Yeah, okay, that was right around when it was introduced. $99. Where's it at now? $271. So it's up 200%. I mean, if someone tells you to buy Intel, that's a good way to test to see if someone's a moron or not. Ask them, what do you think about Intel? And if they say anything good, smack them across the face, punch them in the nose, and then kick them in the balls. Or if they're a female, kick them in the lady balls. Okay? Because they're a fucking moron, and you don't need people like that in your life. All right? So if anyone ever says anything good about Intel to you, I want you to literally assault them. And remember, this is not financial advice. I'm not your lawyer, and I don't want to hear about it if you go to jail for assault. All right? But trust me, they deserve it. ARK, ARKK. I just did a deep dive on Queen Kathy and why she's a loser scumbag. If you didn't watch that, go check it out. And then someone commented, I think she's hot. She's not bad, man. Once a year, I do some charity. I throw a little charity bone. You know what I mean? But she's kind of old, too, and looks frail. And, like, the last couple of years have really worn on her. And, honestly, I don't think she could take it if I really laid it on her. I don't know about you guys, but I'd rather just get me one of these. What's the new thing called? TikTok thoughts or whatever. what's the other one? OnlyFans. Rather find me an OnlyFans, trash bag hoe and be her sugar daddy than have Kathy Wood be my sugar mama. Skillshare, again, just trying to carve out a bottom right here. We'll see. Looks like some potential. It's back at our entry. Had a nice little trade up here for 30%. Arguably, you could enter the same trade again. Looking at this actual chart, I mean, it's terrible. It literally like came out, went parabolic, and then is back down at its entry price. So it looks horrible. The chart looks horrible. But potentially, maybe it just does another cycle just like that. But it does look terrible. Looks absolutely horrible. But I mean, if you liked it at, 45, you should love it at 11. Looks like it's carving out a bottom right here, though. I am still active in a small portion of the position. I think we had like a 30% run up, and I kept 25% of the position open, something like that. So I'm basically just playing with the market's money. Teladoc, getting that bounce off of basically the 1.5 fib extension, back retesting the 382. I think this area will fail and roll over. We could get back up. If we start closing above the 382 and the 1.618, I'll probably enter a scalp back to like 161 or potentially the 200 exponential and simple. But again, they are sloped to the downside, and this thing is having some serious trouble. Serious trouble. Looks like trash. Palantir, technical breakout above that key resistance that we've been paying attention to. Little ascending triangle, bullish breakout, potential target back up to like $37. I have a feeling, though, that this is going to fail and roll back over. They just made that acquisition. There's arguably Palantir. There's a future. It's an investment, blah, blah, blah. I don't know. Something about this chart just doesn't sit right with me. We're above the 200 exponential on simple. I'd just be real careful with this one. But there's definitely potential here, for that trade setup to play out, which was the technical breakout for like a 38% move. And then you could argue, maybe like a 15% stop loss, 2.5 to 1 risk reward ratio. There's something there for sure. People are like, yeah, but Palantir bought gold because of Black Swan event. They bought hundreds of millions of dollars worth of gold. They have like $1 billion on their balance sheet. They bought like 5% of their cash they moved to gold. That is not preparing for a Black Swan event. That's a hedge. Like, you don't say, if I buy car insurance to protect my $100,000 car and I pay $5,000 in car insurance, you don't say, oh my God, he's going to crash. He's expecting a crash. It's called a hedge. You protect your $100,000 investment in case there's a crash, in case there's a Black Swan event, in case someone T-bones you and runs away because they didn't have insurance, in case something goes wrong, you buy insurance. It doesn't mean you expect your house to flood or burn down because you bought insurance. It doesn't mean you expect your car to have a tree fall on it or to get struck by lightning or catch fire, unless it's like a Ford EV or something like that, and then you do expect it to catch fire. It's insurance. If someone spends 5% of their cash balance sheet on something, you don't get bullish on it. You assume that they're hedging themselves. They are protecting themselves against a situation. They're not buying it because they expect a Black Swan event. They're buying it in case there's a Black Swan event. It is insurance. UBX, I just hear people talking about this and they're like, what does Palantir see? What is the Black Swan event? What are they expecting? What is their analytics software? Data analytics, and they're predicting the future and they have access to CIA information. And if they bought $1 billion worth of gold all of a sudden, I'd be like, hey, we're on to something here. They're seeing something. Their data analytic models are telling us what's going to happen in the future. They do know something. But when someone spends 5% of their cash on their balance sheet on insurance, that's literally just that. Don't read too deep into it. And anyone that's telling you Palantir bought gold and now gold's going to go parabolic, well, since Palantir bought gold, gold dumped. So maybe they sold their gold. UBX, Unity Biotech, back down here, retesting all-time lows, trying to carve out a bottom. If we look at this chart on a longer time frame, this is what I'm paying attention to. You know, we came down here, we put in a low at that green support line. We're trying to carve out a bottom now. It's not happening yet. When it does, what do I want to see? I want to see a lower close on the weekly. And then this is going to look like massive bullish divergence. And then I want to see a scalp back to the upside for a nice little push. Are we going to get that? Maybe not, but I'm definitely watching for it. There's definitely some potential here. And then when we look at the monthly, we have technically already put in a new low on the monthly. And there's definitely some potential for bullish divergence. So I'm really paying attention to this level for essentially like some divergence, double bottom action. Does it have to happen? No. But if it does, are we going to crush it after this thing has got absolutely wrecked? Yes, we are. We're going to bend over Unity Biotech Holding. We're going to hold it down, and we're going to take what belongs to us and so much more. Unity Software, the big U. We got the move back up here to the upside. Basically perfectly hit our target. We do expect potential continuation up to the 786. Still a portion of the trade setup open, but we'll have to see what happens here. Technically got a higher close on the daily, so I do expect it's only another 7%, but I do expect to move back up to the 786. And what was that? That's our gap fill. Expecting to close the gap at $146. Zillow, aka Zildo, 200 exponential on simple, slope to downside, trying to carve out a bottom here, putting in a new low. Triple bullish divergence on the daily at this point in time. Almost got taken out of that one. I'm tempted to double down on this. If we can cross this 821 back to the upside, I think we're very likely coming back to 109. If not, potentially to like 121. But again, this is just a scalp. 30% move to the upside, 10% potential stop loss. Almost got taken out with the stop loss. Arguably, if it closes above the 821, starts moving back up, I might even double down, but have a tighter stop. So basically, a second trade setup with a much tighter stop loss and a much tighter take profit area. But something like this might just do like a double down with a 4% stop loss and an 11% move to the upside, a retest of 200 simple, retest to that resistance back here, which was the bottom at 108. Yeah. Bullish divergence looks like it wants to play out right here. I don't hate Zillow, but at the same time, its chart looks like shit. But there's potential for a scalp there. Corsair, look, I mean, it's trying. I'm all about Corsair. I like the stuff they make. Obviously, this stream was brought to you in part by Corsair, as I have some of my equipment in the CPU, in the rig from Corsair. But this thing looks weak. I mean, it pushed up here, couldn't even get to the 200 exponential, and then looks like it wants to roll back over, and now it's showing weakness again. I mean, we'll see what happens. If it takes out this area, if it takes out 28, 25 on a daily close, I'm exiting both positions, the first and the second one, and just saying, fuck it. I already took profits on the initial, like, 15% run up on a slight front run of the 200 exponential, but I really think this thing comes down lower. The chart looks like crap. Company is good. Chart bad. Chart bad. Company good. Zoom got that perfect touch on the heart line. Absolutely beautiful. Now it looks like we're going to get the buy, sell, buy. If we do start pushing up here, it's going to be tough to get above that 8 because it's just been smacking us down. But we have this sweet, sweet gap to fill, which we would push back up to the top of the channel. Do we get there? Probably not. I mean, this thing has just been a massive underperformer, but, there's definitely some potential for a beautiful, beautiful pushback up here and a trade setup. 5.75% stop loss from where we're at right now, 15% move to the upside, like 3-to-1 risk reward. I'm not quite ready to enter. I want to see a close above the 8. But if we do, I think we at least come back up to 306. After that, I think we come back up, close the gap, and then just roll back over. But, nice little move off the heart line. And this thing has just been getting crushed forever. Eventually, somebody has to want it again. It might just be us, but for a scalp lately. Oops, sorry. I might have lost you guys for a second there. Looks like OBS was having some issues, but has picked back up. Yeah, maybe. I don't know. We'll see. If not, I'll catch you next time. But if so, yeah, it looks like we're good. So sorry if I lost you there for a second. My question once again though is anybody part of the group that is either a Discord group or some other group that is like sharing. Damn, what is going on? Man, sorry if I'm losing you guys. We might have to call it here. Looking like some OBS issues potentially. Hopefully coming through. But yeah, there's like some kind of group, Discord group or trade group or something that's like sharing a bunch of my indicators and like going parabolic. If you are part of the group, tell those fucksticks to subscribe to the channel too. And check out our daily or weekly live streams and daily videos instead of just downloading the indicators. Because I keep getting messaged over and over again, hey, where can I see a video on how to use this? Well, probably the YouTube channel. So if you're part of those groups, if you're in those groups, if you're new, subscribe, tell them to subscribe, blah, 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 blah. PayPal looks weak. At support right here, trying to roll over. Probably going to come down to the 200 exponential and simple. eBay looks fairly strong. Probably one of the best charts. Looks like we're going to get continuation to the upside. Snap looks pretty strong. Finding support right here. I mean, we're still leaving a gap behind here. Is this going to be a breakaway gap and it just rolls to the upside? It's possible. I thought it was going to break down here. Found support at a key level. We'll see. Which one does it do first? Take out 78 or break down to 64? Tough situation, but I'm looking at some options on that one. Apple breaking down from a key level. Broke down from support after that breakout. Looks like it's coming down here to 135. It looks weak. Amazon, you know, that was like our throw over top. Is this Wyckoff distribution taking place right here? Sure looks like it to me. I think we're coming back down here initially to our previous entry at 3,300, but in all actuality, 2,900 roughly. Facebook rolling over, looking weak for the first time. This has not had an 821 cross to the downside since February, and it's about to get one right now. If it does, it's got a stair step on the way down, but I think Facebook to 320. If I would ever buy Facebook and didn't absolutely hate it and think it's a total piece of shit, I would probably scalp at 320. But to tell you the truth, I have a tiny bit of like morals when it comes to trading and stuff that I will put my money in. And while typically I just go for the money on scalps but invest based on fundamentals, I hate Facebook. I think it's a total piece of shit and I have no interest in making money off of them. So no thank you. But if I was gonna, that's what I would be looking for. And then Google, still very strong, but looking weak. Again, has not had an 821 cross and it immediately got bought back up back in March. Since then, had like a 50% run. Before that, it was December. Since then, had a 100% run almost, like 60, 70, 80% run. If this thing breaks down here and starts to show weakness, it could very easily come back down to 2,400. I do not expect it, because this is basically controlling the whole market. But if this starts rolling over and we see some selling pressure come in, it could get real heavy. And if it does, it's going to destroy the markets because it's been propping up the markets. So we'll see what happens with Alphabet and Google. And that's, oh, one more. Netflix. You guys know my Netflix situation. I think this is going to end up being a failed breakout. It does look strong, though. Back above the 8 right here. Maybe Netflix goes parabolic. What somebody said something last stream that was hilarious about Netflix. What was it? Oh, I can't remember. It was funny though. But again, I think Netflix is trash. You know, I think they maxed out. They reached their potential. They exceeded their potential. And now it's going to be all headwinds and downhill from here. So yeah, that's it for today, guys. Hopefully you enjoyed the stream. If you're new, make sure you check out the subscribe rather. Appreciate you checking out the live streams. The static videos I'm releasing every day or every other day are just shorter excerpts from the live streams. It's not new content. It's just little rants or key technicals or whatever, just to improve my visibility. YouTube has been appreciating it and actually sharing me with people again. I know it's getting pissed off because I'm talking about, you know, a lot of controversial things and I'm only live streaming. So that's what the static videos are. That's why they're back. Make sure you like, subscribe, share with your friends. Appreciate each and every one of you for being here today. Gold and silver still look weak. Crypto still looks weak. Dollar looks fucking strong. Treasury yields fairly strong at an inflection point. This is going to be a rip your face off week and people are going to lose so much money this week. and then other people like us are going to absolutely crush it. But the most important thing is love yourself, love your family, take care of yourself. Remember, the government does not give a shit about you. The Federal Reserve does not give a shit about you. But you know who does? You care about yourself, or I hope you do, and I care about each and every one of you. So remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Crypto Trend Trader with our Wednesday. God, what day is it? With our Sunday evening market look ahead. Bitcoin looking very weak on the 4-hour, back down at the 200 exponential. Yeah, take care of yourself this week, guys. Don't get wrecked on the crypto circle jerk. Orgies are good, circle jerks are bad. You want new people coming in. You don't want just like bunch of people just standing around talking about how good their investments are, because eventually everybody gets their nut and you're just standing there with a bunch of dudes sad. So there you have it, guys. Crypto Trend Trader, and I'm out of here. I will see you on Wednesday at 8 p.m. Eastern Standard Time. Stay safe, Edward. Appreciate you, brother. Always a pleasure. Everybody have a good night and take care of yourself. Love your family. And remember, number one, before anything, most important, protect your principal. Yeah, right. Hey, I'm sure YouTube loves it when I talk about stuff like that too. So have a good night, everybody. Appreciate y'all. And I will see you on Wednesday for our 8 p.m. Eastern Standard Time live stream. Crypto Trend Trader, and I'm out of here.